So, good evening, everyone. Thank you so much for joining in. This is session 8 of the CIA Part 2 session series, and we are now moving to the Unit 4, which is on risk based internal plan. So, let's quickly look at in terms of what we have studied so far. So, if we begin our initial understanding, everyone, uh, the four sections that we were talking about managing the employed activity, which has a weightage of 20%, out of which we have already covered the first three units. So, basically, now we are done with employed operations, assurance engagements and financial, environmental, and consulting engagements. So we have already completed the first three units in terms of understanding how do we manage the employee function, what are the different types of assignments. In detail, we have understood them, right? Now we are now moving to unit 4, which is the risk-based employment plan. This is a very small unit, people. So what is our target for today's session? This session alone, we will target to complete this unit end to end. So generally what we do, we spend some time in understanding the unit via slides, and then we pick up limb content, and then we do MCQs, right? So that take at least two sessions to do a unit. But this unit is a smaller unit, but a on-spot unit in terms of building up your base, as well as very, very critical for exam. Very, very limited content, but everything that is mentioned in terms of the content is very, very important for the exam. So our target for today in the next 3 hours would be to complete this unit end to end. So that is where we start with. This unit will also act as a base of the subsequent unit. So this is a important chapter to start with, as this chapter is further going to lead the base for the next chapters, right? So unit 4 is internal audit plan. Everyone, let's quickly look at what are we going to learn in this. So very simple risk-based employment plan, everyone. We are going to start with three subtopics in this, wherein we will talk about risk-based employment plan, risk modeling, and communicating and reporting to senior management and the board. Once we have prepared the plan, we need to communicate to senior management and the board for their review and approval. So this is something that we will be talking about it. In each of the subunit, what are the details, what are the things in detail that we'll talk about it. So when we'll start with risk-based audit plan, we are going to touch upon what is risk. We'll talk about priorities based on risk assessment, and we'll also understand what is a risk-based audit plan. So this is something that we'll talk about it, and then we'll talk about risk modeling, wherein we'll talk about risk modeling, something like what we have understood in the risk management section in the part one. How do we prioritize risk with the basis of impact and likelihood? So there's something called heat map. We'll look at that once again. So which is also risk priority and a risk model on the similar lines. People, after this, there's something called audit risk. While we all know what is audit risk, right? Do you all know what is audit risk? Audit risk is what? Can anyone tell me? Can anyone tell the class what is audit risk? Audit risk is the risk that the auditor will.
Better express in appropriate opinion.
Yes, the auditor will express inappropriate opinion is the audit risk. So now today we are also going to talk about within audit risk, what are its components? And this is where we'll talk about control risk, inherent risk, and detection risk. And there's some relationship between a control risk and detection risk. This is something that we will understand in today's concept. This is very, very important for exam, everyone. And the last piece that we are going to talk about is communicating and reporting to senior management and the board, which is where we'll talk about communication and approval, and we'll talk about CA's duties to report. What are the things that the CA needs to inform to the board? So before we get into this unit, people, before we understand what is risk-based audit plan, let's look at how a risk-based audit plan is prepared, which helps you to probably understand and visualize that what are we talking about. So I'm going to share you all a quick screen. Let me know if you all can see the screen, wherein we will run you through how a risk-based audit plan is prepared. Let me know, people, if you can see a Excel file, yes or no here. Everyone, can you all see the Excel file? Yes or no?
Yes.
Yes. All right, great.
Yes.
So let's try to understand how a risk-based audit plan is prepared. And I'll go slowly a bit so that you all can understand a bit in terms of what are we talking about. So people, this is a draft sample employment plan, which is where we are trying to put up a plan for, let's say, 3 years, because um, of course, it could be a rolling plan for 3 years, and annually I can do a risk assessment to see if my plan fits and is still correct or not. Because considering that my size of the company that we are working for is a huge, and we can always develop something like a 3-year rolling plan, and then we can always do an annual risk assessment kind of a thing. But let's say if you're working for a smaller organization, you can prepare it for a year also. That's completely fine. So first thing first, what do we do? So basically, it's a start with introduction, wherein we say that okay, we are trying to identify possible risk events that will impact the objectives of X company. We'll prioritize process sub process based on the risk and the importance, and we'll develop. We are trying to develop a plan. So now here within this, we also have a guidance notes which talks about the different types of risks that we will be identifying. Basically, the risk categories, for example, strategy as a risk, operational as a risk, compliance as a risk, and then inherent risk and the impact and likelihood. So we all know what is inherent risk, what is impact, what is likelihood, and then basically the risk rating in terms of impact and likelihood. So you all know, right? We can do a risk rating. It could be as simple as a high, medium, low, or it could be categorized into multiple other likelihoods and multiple other impacts. So, for example, here we have five likelihoods parameters. For example, rare means very less chance of happening an event, less likely a little bit better than rare, but yes, there are less likely chances of happening an event, likely, high likely, expected. Like that's we have a risk rating criteria. Similarly, if it is an impact criteria, so impact could be an insignificant impact, a minor impact, a moderate impact, a major impact, or a critical impact. So basically, there are, you can say in simple terms, you can say that there are five 1 to 5 ratings for your impact section, and similarly 1 to 5 ratings for your likelihood section. Now, how do you score a risk? And I'll talk about it when we'll run through it later, people. So if you see, if a risk is scored as an insignificant, let's say if there is an area wherein the impact is insignificant, which is one, and let's say the likelihood is also one, which is rare, then probably it's the risk scoring is, let's take an example, one plus one, which is two. And similarly, if it is minor, and let's say whatever is the likelihood, based on that, we will sum it up, and then based on that, the overall risk score for that particular line items comes in, right? So our risk scoring, basically, we are trying to do a risk scoring, and risk scoring, how does it happen? It happens. Um, Risk score is generally created with the impact score plus likelihood score. So let's take an example. If a risk line item is saying that, okay, it has a critical impact, but it is very rare to happen, the risk score is just six, because it has critical impact of five, and it has a very less likelihood to happen, which is rare, which is equal to one. So five plus one is six. But something which is five plus five, which means that it has a critical impact and it's most likely to happen, then it is probably a very serious risk, because five plus five is 10. So overall risk score is just simply created by summing it up, like what is whatever, and this is purely based on influencer's judgment. This is not someone who anyone else would do. This is purely influencer's judgment. Influencer will, based on their judgment, will see and understand that, okay, this particular risk line item that we are talking about, what are the chances of happening it, and what is the impact it will create. So based on that, a risk score is created. And please hold on to your some thoughts for a while, and once we will go through every part of what we are talking about, I will be happy to take up any questions there. So, people, this is basically the impact and likelihood criteria. And if you see here, we have now just provided that, okay, overall risk score, we'll call it out as insignificant if it is between 2 to 3. What does it mean? Let's take an example. The impact is minor and the likelihood is also rare. So 2 plus 1 is 3. So 3 is, if something is up to 2 to 3, it is insignificant. If something which is 4, let's say 2 plus 2, it has a minor impact. It also is like less likely to happen, but it has a it may have minor impact. So it is minor. Let's say something which is between 5 to 6, which is moderate, 7 to 8, which is major, and something which is 9 to 10. Let's say, for example, impact is major, and let's say it is expected to also happen, so which is 9. So 9 is critical, right? So this is how a criteria has been set to rate a overall risk score. So here we get the score, and here we get the score, and then based on the score, each risk line item is basically categorized as an insignificant risk, minor risk, moderate risk, and major risk, and critical risk. So once all of this happens, the next step is, now we need to create a overall scorecard for an area, right? Now, what is overall scorecard? So let's take an example that there are so many auditable areas in a company, right? There are so many auditable locations. There are so many things that we can audit, right? So what is the over? It cannot be at a risk line item, right? For example, P2P as a area, procure to pay area could have 40 risk, right? So you cannot be judging it on a single line item basis. You will have to score a process to identify what are your critical process, critical locations, critical areas, right? P2P in corporate office is critical, or P2P in a factory is important, or P2P in a branch is important, right? So based on the locations, based on the process, based on the operations, this needs to be done for the company. But based on that, based on basically what you are going to do is, you are going to look at the overall scorecard of your process. And how does the overall scorecard comes in? So whatever are your critical risks, you have weighted it into five, major risk into four, moderate risk into three, minor risk into two, and significant risk into one, and you have divided it into the total number of risks. So that is basically the overall auditable area risk. I'll show you how does it work. So based on that, whatever scorecard comes, that area comes into a high, medium, low risk area. And once this high, medium, low risk area comes in, based on that, you can define that, okay, high risk areas, I will do it every 6 months, every 12 months, every 18 months, whatever your organization and the expectation between the senior manager and the board has. Similarly, for a medium area, I will do, let's say, every 9 months or every 12 months. And a low risk area, I'll pick it once in 2 years, or let's say once in 1.5 year, whatever is the frequency you want to do it, right? So let's say this is a big conglomerate. Here we are talking about every critical area we'll took it once in every 18 months. Every medium low area we'll pick it once in 2 years, and every low area we'll pick it once in 2.5 years, right? So this could vary. Now again, this criteria you can fix it based on your understanding, but this is a simple example that I'm trying to talk about it. Now let's try to understand. This is just the guiding document. Now let me just share more insights what I am talking about. So let's take an example, people. Let's take an example that there are so many auditable areas. Let's take an example that there are, first we need to identify all our auditable areas. We need to know what is our risk universe, right? So let's say risk universe is very much. Let's take an example. We have 15 entities, or let's say we have 25 locations. We have multiple warehouses, multiple types of system, multiple types of areas, multiple type of coverages. So based on that, what we do is we basically try to identify our auditable areas. And once we know our auditable areas, let's take an example. Let's pick source to pay, which is your P2P as an area, one area wherein what we are trying to do, we are trying to do a risk assessment. So here, in order to do my risk-based audit plan, in order to prepare my risk-based audit plan, what are we doing? We are doing a risk assessment for that area. Now, let's take an example. This is a risk assessment, and this is where we are talking about a group level procure to pay. There could be a P2P level leg, which could be a local level purchase that could be done into different entities also. That could be separate. But let's take an example. We're talking about a group level or corporate level purchases. So, which is where we have, let's take an example. These are the various risks that we're talking about. So, it covers areas around procurement, SLAs, planning, capex procurement, PR, PO, custom clearance, transit, equipment leasing, whatever nature of company, vendor onboarding, database selection, emergency purchase, purchase order, legal, segregation of duty, purchase return, vendor performance evaluation, invoice processing, and so on and so forth. So basically, whatever are your areas, based on that, you've identified the risk, and this risk is at an inherent level, people. What level is this risk I'm talking about? Can you all say that? This is at an inherent level or a residual level? This is at a inherent level. Can you all say that? What is the level? Can you all please put it on the chat box? Here we are talking about
Inherent
a
level.
inherent level risk is
Inherent level.
something that we are talking about, which means that I am trying to know whether what is the chance of this risk happening. Because if it is a high chance of happening, and let's say if it has a high impact of happening, in that case, the control for this area, the control for this risk becomes very, very important for me, right? So I'm going to do an inherent risk score wherein I'm going to, let's say I've categorized this risk into different categories, and then based on that I'm trying to put it up whether it's a minor risk or it's a likelihood, whether it will be minor impact or a likelihood, and based on that a risk score gets created. So a minor is what? Let's go back to the guiding document. What was minor? Anyone? What was minor? 2. And likelihood is what? What was the likelihood here? The likelihood is likely. What is likely here? Can anyone tell me what is likely here? It is 3, right?
3.
So 3 plus 2 is 5. So 5 is getting in where? What is the risk category?
Moderate.
It is moderate category, right? So here, if you see, it is moderate category. So likewise, what we have done is we have prepared for each risk. For each line item, there is a risk category that has been done. Now, each area would have certain minor risk, certain major risk, certain critical risk like that. And based on all of that, what we have done is we have created a process scorecard. Now, what does a process scorecard provides? Now, if you see, these are all the auditable areas. If you see, this is all the auditable areas. For example, there are 40 auditable areas. These are group level things, and then these are, let's say, entity level. There could be multiple entities, so these are entity level things. There could be like various entities, right? So various entity level things, and then based on each group level area or an entity level area, we have identified the number of risks, and then we have called it out to how many critical, major, moderate, minor, and insignificant risks are there. So based on this area, what we have done is a weighted average score. Weighted average score, how does it come? So for a critical risk, what was the weightage given in the guidance note? Anyone? What was the weightage given on the for the critical risk? Can anyone tell me what is the critical risk weightage? It is
5.
5. Similarly, major risk 4. Similarly, moderate risk 3. Similarly, minor risk 2. And similarly, insignificant risk 1. Right? So we'll have to give a weightage. So let's take an example here. We have given weightage 1 into 5, then 17 into 4, 9 into 3, and let's say 2 into 2, and let's say 1 into 0, right? So that's how we have calculated divided by total number of risks in that area. And with that, we have got a weighted average score of 3.70. So now what is 3.70? Can anyone tell me 3.70 gets fit in where in the overall risk score of the process? Is it low, medium,
High.
high?
Hmm.
It is
High.
high. So now it is high. So likewise, what we have done is we have for each areas, there is a risk assessment. So what I'm trying to say, everyone, I'm not saying this is the only way of doing it, but I'm trying to give you some insights at what is called a risk-based audit plan. You just go to the board and say that, okay, I have prepared the plan. We'll do P2P for this location, O2C for this location, R2R for this location. We'll do ITGC here, and just go like a vague way versus You prepare a risk-based audit plan which says that okay, in source to pay, these are the areas that we have understood, and these are the risk assessments that we do in terms of the risk category, and then this is the overall scorecard. And likewise, we have fixed assets. Likewise, we have costing and budgeting. Like says we have payroll. Let's say likewise we have TA, travel admin, treasury, ITGC, IT security, HR. And then various other entities, entity level order to cash, entity level planning and production, entity level safety and quality, entity level inventory, entity level project and scrap, dispatch process. Likewise, so many process. If once we have done all of this, let's say so many areas, and this is a detailed exercise, by the way, it's not like a one-day job, everyone to prepare a risk-based audit plan. It needs a lot of collaboration, it needs a lot of understanding of the business insights, and based on that, what you do is you prepare for each area you basically prepare a scorecard, and based on that weighted average scorecard you categorize that okay, these are the processes, and these locations are high risk category, these are medium risk category, these are low risk category. And your guidance, what does your guidance note says? For a high risk area, what will be the frequency of doing audit? Anyone? What is the frequency of
Every
doing audit?
18 months.
Every 18
Every
months.
18
For a
months.
medium risk, medium risk area, what is the frequency of doing?
24 months.
24.
24
24
Now,
months.
months.
this is not something that the standard says, first of all. Okay, don't take it as per the standard that okay, standard says okay, a high risk area need to be audited every 18 months. That doesn't work like that. As I said, let's say your organization is a small organization, it's a promoter driven organization, right? And promoter says every high risk area should be done quarterly, every medium risk should be done half yearly, and every low risk should be done annually, because the size of the operations are not that big, right? And there are chances that you can do it. In that case, you can do it. But let's say there is an organization which is, let's say, a medium sized organization wherein you can set up a different frequency for this. So it all depends on the expectation, of course, team availability, budget, all of that also comes in place. But basically, this is how you can prepare your plan. And once you have process scorecard, now if you see there is a IA plan. Now this IA plan talks about audit entity, so it is audited entity audit, or you can say this is a area that you're talking about. What are the broad areas that you're going to cover? What is the risk category and what is the audit cycle? So you want to do it every 18 months. So let's take an example. You have picked it in the January to March in the first quarter of 2020, or let's say today's 2025. So you picked up in 2025 January to March. Then probably in 2026, somewhere next year end December, you will pick it up again. And then probably next year after that, you will pick up maybe in 28 or 29, whatever it is, after 18 months. So this is how you start putting up your plan that okay, these are the areas that we'll be picking up in 25 first quarter, then this areas will pick up in the second quarter of 2025. This area will pick up in third quarter in 2025. This area will pick up in fourth quarter of 2025. See what is there. So we are preparing the audit plan which gets freeze for this year. Are you getting it? So let's take an example. This is 2025, everyone. This is 2025. This is 2026, and this is what, 2027. So for 2025, your plan gets freeze. For 2026, this is a tentative plan, right? For 2026, you will always like to redo this risk assessment and see if there is any change of plan. You may, during when you're doing this, you can probably do one more year, 2028, to see what will be the tentative plan. Because during the year, there are a lot of things that keeps happening, right? Maybe this particular entity got closed. Will you still do 2026? During the year, 1 year is a long period. Let's take an example, one specific entity. Let's take an example here, this entity KLM got closed. There are very, very high chances, right, that the company get into diversification, they close the entities during the year, or they acquire new entities during the year. It's very well possible. Do you all agree with me? Yes or no? Yes? Yes or no, everyone? Yes,
Yes.
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 so
Yes.
for this, what we need to do, we need to keep doing a risk assessment at least once in a year. That's what the standard says, everyone, and that's what we discussed earlier also. What is the minimum frequency to do internal risk assessment? It is once every year minimum. You want to do it every month, it's okay. You want to do it every half year, that's also okay. But minimum frequency is once every year. We would like to focus on. We want to see whether this entity is still a high risk or may have shift to a low risk, right? So next year when we will do, we can leverage what we've done earlier, but we will redo the risk assessment and see if it stands state, and then we will take the plan approval for that year also, right? So generally, internal plan gets approved every year on year basis. It needs to be approved by the senior management and the board, and this is should be based on risk assessment. How do you go to senior management? Think it this way: how do you go to board? Just go and tell them, okay, this is the area you want to audit, or something like this will enhance your credibility in terms of what you're talking about. What do you think, everyone? Something like wherein you have done a risk assessment and you have prepared a detailed risk-based audit plan, and when you can speak about what is the basis of doing this, what are the key risks that you're looking forward to do, are you think that this will enhance your credibility in terms of the work, or just going random will help you to will enhance your credibility to the work? What do you think?
This will increase the credibility.
This will of
This will
course increase the
enhance. Yeah.
this will increase the credibility, of course, right? So everyone, now if you look at it, so within the IA plan it also covers the detailed indicative scope, right? So this is indicative scope during the plan itself, like okay, in finance and accounts, we'll look at these key areas. In corporate, these are the things that we'll check, and maybe X entity will also check this area. So, and what are the mandates that we are expecting, right? To do this review, probably I need a 90 mandates, right? First time, and maybe next year, and next year I may need a little lesser mandates. So similarly, for the next area, how many mandates do I need? So this mandates also, we can also put it into different effort estimates. So total, let's say in 2020 we need 830 mandates, or 2021 we need this many mandates. The existing resources that we have is only can spend only this many mandates, so I need additional mandates of this much. So then probably I can also put across into different team members also. Let's take an example. I how many IA managers I have in my team, how many employers I have in team, how many staff auditors I have in team, and based on that I can probably say that okay, I need these many more team members also, right? So I can prepare a plan. I can tell them, okay, this is what I have, this is what we need more, this is how we'll fulfill the plan, right? That should also come, right? It should not be just the plan itself that okay, I prepare this, I'll do it, right? How will you do it, right? Whether you need more resources, you don't need resources, and that's why earlier we discussed, right? This is plan for the year, and this in principle, once you get okay, let's say on the plan you get on the high level plan that you presented to the board, you have got the approval that you need to onboard two senior auditors, one manager, three, let's say, directors, whatever it is. Based on that, you can, on a day-to-day discussions, as part of your administrative responsibility, can go to the CEO, or the top management, and probably look for the resources and get aligned and approved, and start onboarding them, right? But in principle, your annual plan and annual audit budget gets approved by the, by whom? By the senior management, or by as part of the function reporting relationship by the board? What did we learn in the initial
Both.
unit, everyone? It is
Board.
by the board. So I hope you've got some instinct of what are we talking about. I'll take a pause here, people, and I'll rediscuss the whole concept once again. Risk-based audit plan, risk-based employee plan. Here we are what doing? We are doing a risk-based audit plan. It's not like a traditional plan. Here we are saying that okay, first thing first, what we'll do is we'll try to identify a risk universe. Can you all say that? First thing, what are we going to do? We are going to identify the risk universe. Can you
Risk
all say that?
Universe.
universe.
What is risk universe? In simple terms, risk universe is all auditable areas. Can you all say that? Risk universe is all
All
auditable
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 areas.
areas.
area. When I say all auditable areas, what does it mean, Arpit? All auditable areas means everything that can be audited. It could be locations, it could be systems, it could be processes, it could be technology used, it could be anything, right? So all auditable areas, location level, entity level, process level, whatever is there, we based on that are identifying those. And for those areas that we have identified, which is act as my audit universe, or risk universe, I will now do next step is risk assessment. And based on the risk assessment, based on the risk assessment which we measure how do we do risk assessment in terms of, how is risk measured in terms of impact and
Impact and
Impact and
likelihood.
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 Once that
Likelihood.
risk assessment happens, each risk gets scored, and overall we are creating a process scorecard. And based on the process scorecard, we're trying to put up a plan in place. And based on that plan, we're going to take blessings from whom? Ultimately, the blessings has to come from the senior management and the board on this plan. And this plan will also talk about what is the number of people we need, what is the infra requirement we may need. All of that can be put across in this plan to talk about how do we achieve this. Makes sense? Is that clear, everyone? Are you all have got some insights to how do we prepare a risk-based audit plan before we actually get into the topic of discussion? Yes or no? People, can I see
Arpit, I
you?
just have a
Yes.
question,
Yeah,
Sanjeev here.
please go ahead, Sanjeev.
Yeah, so when we are doing the risk assessment,
Yeah.
every step when we are giving the risk, are we considering the existing control description as well? Whether the
Yeah.
because
So
how do we do that?
So if you see, generally the risk rating that we do is at an inherent level and not at a residual level. And the reason why is, let's take an example here. We have put up the control. Let's say lack of vendor contract performance evaluation may lead to purchase of material service from vendors contractors with poor delivery quality standards. Now there are high chances of this happening, and it will have a moderate impact. But let's take an example. There is a control which says the department do the performance evaluation of vendors. However, the periodicity of the evaluation is not defined. This is the current process, right? Based on your initial discussion, initial understanding of the process, whatever it is, or whatever the past experience of your of the organization that you have. But the idea here is the risk rating has to happen at an inherent level, because if let's say inherent level risk is only low, I mean, we don't have to really bother too much on the control for that, right? But let's say if the inherent risk is very high, in that case, that control becomes very, very important. This is something that we'll talk about later, that which controls are more critical for us, which reduces the gap between the inherent and residual risk. If the inherent and residual risk gap is very high, which means that control that has been, or the risk response that has been put across is very, very critical. Are you getting what I'm trying to say? See, inherent risk is high, residual risk is low, right? Which means that the control, whatever is the risk response that has been put across, that becomes very critical. That's why it has led from a high risk point to a low risk point. So that's why check becomes more important for ensuring that that is working effectively or not.
Yeah,
Otherwise,
but if I don't consider the existing controls, then what happens is that my risk is inflated because I will be working on a data where I'm not considering the existing control. For example,
yeah, that's true.
in my
That's true.
P2P, if
Mhm.
in the banking, if my banking is integrated with the SAP is integrated with banking, so there are a
Very
lot
good.
of controls which I don't have to do it because the system is there. Maybe I will do one or two testing to ensure that
Very
there
good.
is
Very good point. So exactly, Sanjeev. So what are those one, two testing? Why this areas you want to test? Because you want to see that these are the high risk areas, right? Otherwise, how will you test? You're right. You're right that I am looking at an inherent level and I'm not considering the control, which means why are we doing it? We are trying to do it so that we know that these are the critical areas, and and we need to ensure that controls for these areas are working effectively. That is the purpose. Otherwise, what will happen is if we look at residual risk, then we are assuming that those controls are working effectively. See, the delta is what? The delta is either you look at the residual risk, right? Residual risk when the controls is implemented. Now you're looking at whether the residual risk is working effectively or not, or whether the residual risk has increased or not. But ideally, your residual risk should not be beyond the risk appetite, right? That's what we have understood. Residual risk is the net risk, right? It should not be beyond the risk appetite. So there should be adequate risk responses that should be already there. Here, what are we trying to see? We are trying to see that, okay, what are the inherent risks which are high? The controls that have been implemented to bring that inherent risk to low, which exactly you said that, okay, if it is a banking system, there are so many controls that are there in the system, but you need to ensure, right? Our role is what? To evaluate those controls are working properly or not. And
right.
that's why we are doing inherent risk rating and then trying to see that, okay, the controls for that, which is reducing that to a low level, whether those are working effectively or not. Let's say something which has an inherent risk itself is low. Let's say this has a low risk of happening at low impact. Even if it happens, doesn't create too much of problem to us. In that case, the control, underlying control, even if we don't check, let's say, it's okay, right? If there is a very less inherent risk or impact is also low, and let's say if the control, underlying control, even if the management has implemented something, even if we don't check it, it's okay because it's not going to impact too much. But
Correct.
but the risk wherein inherent risk itself is very high, there is a huge impact of happening. Let's say a duplicate payment can happen high, but let's say there is a control in the system which restrict vendor invoice to be processed with the same vendor name and the same invoice number, which is very well there. Most of the SAP system or any ERP system will restrict same invoice to be processed in the same year twice, right, with the same description. But this is an important control, otherwise people will start making the duplicate payments. So we need to check whether that control is working or not, and that's why it is done at an inherent risk level. Make sense?
Got it. Got it.
Yeah.
Thank you.
So I completely agree. And I think it's very, very difficult to move the delta of not considering the control because we are habitual of thinking that way. That, okay, first we will think the control and then we will see, okay, post the control, whatever is left out, let's see that. But idea is not that. Idea is to see that, okay, because then you're saying that all those controls are working effectively, which necessarily may not be, right? When we do audits, we see a lot of cases wherein quality release is not happening for certain material in SAP, while the impression is every item that comes in will have a quality release in SAP. Or let's say the system will not allow duplicate payment to happen, or a system will not allow a duplicate vendor code to be created with the same GSTI number. Right. So there's so many things that we believe that there is in the system, but we do test all of those in the audit, right? So we need to check all those high risk areas wherein we need to check all those critical risk based on the inherent level risk factor, not at a residual risk factor. Is that clear?
I completely get it now.
Yeah.
Thank you.
The-
Thank you.
Thank you. Thank you.
Higher.
Yep. Please go ahead.
Yashas here.
Please go ahead.
So on the risk scoring part, is it the auditor's responsibility or both the auditor and the management's
The
responsibility?
risk-based audit plan is generally prepared by the auditor. They definitely take inputs from senior management and other stakeholders. So if they want, they can take inputs from the various stakeholders. Now, see what happens, and I'll be very honest. Now, think it from a delta. Let's take an example. We say, okay, there is inherent risk is high. You will not do vendor performance evaluation, and your vendors will not provide standard quality of material. Let's go and take this discussion and forward to any process owner. Process owners will start laughing. Like, what are you talking about? Why will we not do vendor performance evaluation? We do all vendor performance evaluation. There's no chance we don't do vendor performance evaluation. How a vendor will work with us for a long time if we are not doing performance evaluation, right? That kind of a reaction will start coming in, right? Do you agree with me? Yes or no? Or let's say we say that okay, the risk is that there could be chance of duplicate payment. Then the straight answer would coming up there would be what? It cannot be possible. We have a maker checker process, we have invoice verification process, we have the system control, we have reconciliation that happen on the month end. There are so many controls that we have. So how can a duplicate payment happen? So see, if we can take inputs from the senior management, the board in terms of understanding what is the control, but what are the chances of happening in terms of impact and likelihood? This is something that internal auditor can also will largely apply on the implementer's judgment. Are you getting it? So what I'm trying to say is the inputs can be collected to know whether there are controls or not, whether the volume, what sort of volume is there or not. Those inputs can be considered based on that. This risk rating can happen, but otherwise it is purely implementer's judgment. Make
And
sense, Yashas?
in case of known risks, like in case there are known risks, this is up to happened. This will happen at any accepted risks. Such cases,
Accepted risk, as in, can you repeat yourself?
for instance, some control is a accepted failure by the management. Such risks, how we go about such risks.
All right. So see, if there's something which is accepted as a risk, we need to understand that whether that risk that has been accepted by the management is within the risk appetite or not, right? So if the risk or risk tolerance levels or not, if the risk is within the risk appetite, risk tolerance level, then we are all okay. If the risk is accepted risk is beyond the risk appetite, let's say, I'll give you an example. Let's say the management, there are some GST non-compliances happening, or let's say the company is into a restaurant business and there are no FSSAI license that they have taken, and let's say management has accepted the risk that okay, tomorrow if any FSSAI department officer comes in, will manage it somehow, right? Let's say they have just accepted the risk like that, but the board or the stakeholders believe that no, we cannot be non-compliant. We have if any sort of non-compliance is not tolerated. In that case, if the management has accepted the risk, we need to go and call it out in front of the board. First, we need to discuss with the senior management why you have accepted this risk. Why are you not taking license, right? If management has some strong reason, if it could be convincing to us, is a separate point. Otherwise, we'll have to take it to the senior management and the board and tell them that okay, this is something that is accepted risk, but which is not in line to what we have discussed in terms of the risk appetite and risk tolerance level. So this is how it happens with the accepted risk. But if it is within the risk appetite, risk tolerance levels, then it is okay. I mean, we'll just need to understand what is the reason they have accepted the risk for. Make sense?
Yeah, got it.
All right, great.
Arpit, yeah, I've got a question here.
Please
So,
go ahead.
in terms of this completion of this risk assessment exercise, say we complete the exercise
Mm-hmm.
by last year, for say this year, we complete in December. Now we start auditing cycle in this particular, say in January, and kind of complete one audit in say February. Then, what is the frequency at which the risk rating of each particular audit universe entity needs to be revised? Say we've got a critical rated entity previously, but after auditing we find no flaws in that. Now we feel that since there are no flaws, the entity risk rating needs to be updated. So, what is that frequency? Does it any standard prescribe any frequency for
No.
updation of
So
the?
standard prescribe that you need to do a risk assessment once in a year. Let's take an example. You did the audit and there were no major flaws. See,
Yeah.
I think you have not identified major flaws is not a risk assessment. Is again when we are talking about residual level, right? So based on your past experience, you can of course put up the priority to the location that okay, we want to pick this location because generally we see major issues in this particular location. That could be one factor. But let's take an example. There could be a site wherein there are good controls in place, but that's a very critical site, right? But you will still evaluate that as an auditor, right? Because there is high dependency. If something goes wrong, there could be huge problem to the company, right? The management, the stakeholders can get significantly impacted for that. So I think assurance level doesn't get depends on the last sorry, I think there's some disturbance. Rohit, I'll keep you on mute because and then you can of course unmute yourself. But what I'm trying to say, it all it doesn't depend on the flaws identified in the audit. I mean, based on the status of the audit results, you can probably take a next year plan of action, whether what is the frequency you want to do it or not, depending on, let's say, there are multiple sites, few sites are grossly doing bad versus a few sites doing very good. But more than that, it depends on the risk assessment of that site, that how much are we dependent on the site, how many critical things are happening at that site. I think that's very important, and all of that depends on the risk assessment. So there's no frequency assess that is defined for changing a risk rating for a particular location, but again, it will automatically happen it based on a risk assessment. And risk assessment is something that the standard defines that it has to happen once in a minimum once in a year.
Mm-hmm.
Okay,
Okay. Yeah. Thanks.
make sense?
Yeah.
All right, great. So do we have
Arpit, one doubt.
Yeah.
Sorry.
yeah, please go ahead, Deepak.
Is there any special scoring given for fraud risk here? For example, in serial number 8 and 9, right? Can
Mhm.
you go to that?
Process scorecard.
I mean, no. Fraud risk. Fraud risk. Here in that scoring. In serial number 8, we have the weighted average is 3.75, and in 9 it's 2.82, right? So which means Treasury is given more weightage and IT General is given 2.82. But what if we have more fraud risk in IT General Controls? I
See,
mean,
if it is fraud risk, then we'll have to call out those risk line item as critical, right? So let's take an example. If let's say there are ITGC, there are, let's say, five critical risks, then this area would have automatically become critical that way, right? So we'll have to see. Let's take an example here in this ITGC. Let's take an example in ITGC here. Um, let's pick this out, right? So ITGC here. Let's take an example. These are while we have rated it major, minor, moderate, but let's take an example. There are certain areas which are software licenses. Let's take an example. It says this is less likely, but let's say there could be fraud here, like unauthorized licenses can be taken and all. And if you see, then overall you can put up a risk category as critical. If all like any fraud risk areas would generally become critical, right? So if you feel that way, then those line items specifically you can rate it as critical. And if those are critical, then your overall scorecard will automatically get changed. Make sense? But you will have to look at the process level, at a overall level, not at a line item level, because otherwise it will be very difficult. You cannot be looking at a single line level risk for your across the companies, right? When you will pick up a process, you'll pick up the entire process, right?
okay.
Make sense?
Yeah, okay.
All right. Any other doubt that we have on the internal plan, everyone? Are we good? Do we get some insights in terms of how do we prepare a risk-based audit plan? Can I quickly see yes on the chat box? People, have we got some idea on how do we prepare a risk-based audit plan? Yes or no? Can I quickly see yes on the chat box, everyone? Yeah, Deepak,
An-
all right,
Ankit, I
please go ahead.
just had a question.
Please go ahead, Deepak.
Yeah. So while we prepare this internal risk-based audit plan, okay, and we have this various audit universe which we are looking at
Mhm.
with respect to different areas, but it may so as well happen that we will not be able to anticipate the risks that a particular team or a particular department has from the audit standpoint.
Okay. So you're trying to say that our risk assessment itself maybe not be correct, right? Is that what you're saying?
Not be completely 100% correct is what I mean to say. So for
Very good,
example,
Deepak. Very good. So, see the way to look at it, and this is something that when we build our concepts in the future topics, we'll understand that see risk-based audit plan is prepared at this point of time, right? So let's say today is 2025, and we're talking about April 2025 onwards. So let's talk about next financial year. We are preparing a risk-based audit plan now, right? Which will take the approval in March. So based on whatever is our understanding, based on whatever discussions we could have, we have prepared this plan, right? And based on that we have done this. So it's not that on a day one, Deepak, you will be fully ready and you will be able to do everything, right? So generally this exercise takes a lot of time. For the first time, year on year, it becomes much easier because you understand business, you're in the day-to-day discussion, you understand the expectations from the board, senior management, so it becomes much easier to do it. But let's say for the first time it will take a lot of time. Saying that, when we move on to the subsequent topics, when we will talk about engagement planning. Engagement planning is, let's take an example, I need to do a ITGC audit, right? Let's take an example here, I need to do ITGC audit. And this ITGC audit is, let's take an example, is part of my October to December plan. So let's say October to December, I'm going to do ITGC audit. But my planning was happened, my employee plan was prepared when? in January to January, February 2025. My audit is happening when? In October to December, right? So when I'm going to do this audit, we'll understand that when we are going to do audit, when we do engagement level planning, once again we do a risk assessment, which is called as preliminary risk assessment. And that point of time, we actually identify what are the areas of engagement emphasis. So you're right in a way. You're saying that, okay, Arpit, I may, when I prepared the audit plan, I may not have understood it properly, right? Or I may not have identified all the risk. But let's take an example. In January to March, you have looked at P2P as an area. So you got to know in P2P there were a lot of access issues. Let's say in April to June, when you have looked at finance and accounts as an area, in those also you noted a lot of ITGC related issues. Let's take an example. Or let's say you have picked up FAR as an area. In FAR, also you looked at IT assets, and IT assets, you were seeing a lot of concerns coming in, like when you looked at the fixed asset register, the relatable assets. I'm just saying relatable areas, right? So in October to December, when you're going to do an ITGC audit, you will pick up those learnings also, your understanding on the business also, and you will redo a risk assessment and try to see what are your areas of engagement emphasis for that particular engagement. So maybe at not at that point of time, but by the time you go and do audit, you will have a better understanding. And when you even prepare your work program, let's say during the course of assignment also, if you find certain critical more areas, then you will add to your work program. That's always okay. But to start with, you have to do your risk assessment, and your risk based audit plan has to come up, right? I mean, it cannot be just generic traditional no basis kind of a document. Rather, you bring up something like this which gives you a comfort also on what basis have we done it. And this also act as a basis when you pick up an engagement, you know, okay, this is something that we thought for when we have prepared this plan. Let's look at these areas whether it's working properly or not, and see if there is some more changes that has happened which we need to incorporate during the course of audit. Are you getting it?
Perfect.
So this is more like a starting stage,
Got
uh,
it.
kind of a thing. Yeah. All right.
Yeah. So my only concern was that this has to be revisited when you're actually going to do the engagement planning. That is what the question was.
Yeah, that's okay. Right. So perfect. So I think we are getting some clarity, right? Everyone here, are we getting some clarity here? Can I quickly see yes on the chat box, please? Everyone, can you all please put yes on the chat box? Can I quickly see yes on the chat box? Good to goes on the chat box. People, before we get into the topic, it's very important to understand this. And now when we read it, I think it will be much easier to understand because now our perspective is clear. What are we trying to do? So let's start with the first topic wherein we are talking about risk-based audit plan. People, just 2 slides. So I would request sincere attention here because these 2 slides can give you 3, 4 questions easily in the exam, and you can easily score it better, right? So can I see GTGs on the chat box, please? Can I please see GTGs on the chat box? Everyone, can you please put GTGs, right? So I have GTG from Ranjana, we have from Deepak, we have from Radhika, we have from Unmesh, we have from Nikita, we have from Manish, Manali, Nitin, and Shira, Shiva, everyone, right? Lovely people. So very, very simple unit, but let's pick this up. What is risk? Everyone understand. So what is risk, people? Can you all say that? Risk is the possibility of an event occurring that will have an impact on achieving of objectives. It is measured in terms of, can you all say that? It is measured in terms of
Impact and likelihood.
impact and
Impact
likelihood.
and likelihood.
People, priorities based on risk assessment. As I said, in the risk-based audit plan, the priority is based on risk assessment. The employee activity plan of engagement must be based on a documented risk assessment. Can you all see that? This risk assessment should be informal or it should be documented. What does the standard says? Standard says that the internal audit plan of engagement must be based on, can you all say that? It should be based on a documented
Documented risk assessment
risk assessment undertaken at least, what is the frequency? Annually.
annually.
Right. So people, please take that as a note. What is the minimum frequency to do the risk assessment? It is once in a year. If you go back on the part one, again, if you go back on the part one, initially we have practiced some of the MCQs as part of functional reporting relationship. And wherein we picked up a question that, okay, we are talking about an audit budget, or we're talking about an employment plan, or we're talking about a risk assessment or a charter. If you remember, there was a question wherein a lot of us got confused between risk assessment and a budget. If you look at plan, automatically have a budget for the year, right? Our audit level budget could be a much more granular thing which we can discuss with the CEO and the top management kind of a thing. But risk assessment, people, what is the minimum frequency to do risk assessment? Once in a year, we need to do risk assessment and present it to the senior management and the board. And of course, employee charter has to go to the board, right? So all of that becomes my part of functional reporting. Doing risk assessment and reporting the results of risk assessment is also part of my functional reporting relationship. Is that clear, everyone? Doing a risk assessment annually and reporting the results of risk assessment to the board is also part of my, can you all say that? Is also part of my functional reporting relationship. Are we clear so far? Yes or no? Yes?
Yes.
Yes.
All right. People, another point is the input of senior management, the board must be considered in this process. But this is very important. Sometimes the examiner will ask you people, what is key in prioritizing the employed plan of the year? Is it the board input? Is it the senior management input? Is it the CFO inputs? Or is it the internal auditor's judgment? And I'm telling you, half of you will select board inputs. Many of you will select senior management input. And the answer is internal auditor's judgment. People, I'll repeat that the input of can you all say that the input of can you all say that the input of senior management and the board must be considered in this process, but however the final the final input in evaluation of the risk is whose? Can you all say that the key input in the evaluation of the risk is the internal
Internal
auditor's
auditor's judgment.
judgment? So we can always consider the input coming in, but final input, final thing is basically the key input in the evaluation of the risk is the employer's own judgment, right? Now, that judgment could be based on the inputs that is received from the board and senior management is fine, but for the exam, if examiner says that, okay, how do you prioritize in your risk assessment based on board inputs, senior management inputs, or let's say employer's judgment, or let's say CFO inputs? Your answer would be, uh, your answer would
IA
be
judgment.
IA judgment. Please take that as a note. Of course, when we'll practice some of the MCQ, we'll get that more insight. But are you all clear? This is a very, very important note, and a lot of us make mistake here itself. I'll move on to the next part, people. It says understanding risk-based employed plan. So the employed activity audit plan is based on what? So what did we learn, people? The first thing that we start with is
Audit
the
universe.
audit universe, which is basically my risk universe, all auditable audit universe, or you can say all auditable areas. Then input from senior management in the board and the assessed risk, right? So based on the risk assessment that we've done. Audit universe is what it is. Can you all say that? Audit universe is
All
all
auditable risk.
auditable
All
risk
auditable
areas.
area.
All auditable risk areas. It should be assessed at least annually to reflect most current strategies and direction of the organization. So at least what is the minimum frequency to do risk assessment? Again, it
At
says
least
it should be at least annually. Risk management process and employed plan. People, what is risk management process? Anyone? What is risk management? Is it employed and risk management is the same thing? Yes or no? No, right?
no.
Interloid was independent, objective assurance and consulting activity, right? That's what we've understood, right? Versus risk management is what? It's a process to identify
Identify, assess, manage.
assess and all of that, right? So we identify the context, and we identify the risk, and we assess the risk, and we prioritize the risk, and then the risk response is put, and then the risk is monitored. So risk management is a process to identify, assess, manage, and control potential events or situation to provide reasonable assurance regarding the achievement of organization objectives, right? So same definition that we've understood, everyone. So people on this page, I think the one critical learning that we've got is the key input in evaluation of the risk is whose? Can you all say that? The key input in the evaluation of the risk is the
Internal
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 auditor's
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 judgment.
judgment, right? Very good. People, I'll move on to the next slide now. This is very simple risk priorities and risk model. So we all know it is done on impact and likelihood, and something that we've covered in the previous session also. This is like between risk D and risk B. Which one will you consider more important? Which one? Risk D or risk B? Risk D has a likelihood and a larger impact. Which one is more priority for you? Can you all say
C.
that?
Risk D.
It's
Risk D.
it's D.
Risk
Bet-
D.
Between risk C and B, it is risk C, of
C.
course.
C.
But
C.
between risk A and let's say risk C, it is again risk
C.
Risk
C.
C.
But between risk A and risk B, what did we learn? It depends on the culture of the organization, right? If the organization is more concerned about the critical risk, they will focus on risk A. If the concern of the organization is more about likelihood, then they will focus on risk B, right? This is something that we've also covered in the previous people who have attended part one. We've covered there in the risk management section itself. So basically, nothing. But here we are doing a risk modeling based on impact and likelihood. We are trying to prioritize the risk, something like the same way we have also looked at much better way when we have looked at the risk-based audit plan on the Excel file. So risk modeling is an effective method used to rank and validate risk priorities when prioritizing engagement in the audit plan. Risk factors, impact, and likelihood may be weighted based on the professional judgment, and this is a small risk map. Right. So again, this is not very critical, but you should be knowing it. The impact and likelihood, very simple. Now, people, very, 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 very important for the exam is the audit risk and its components. So can you all say that audit risk is has three components: control risk, inherent risk, and detection risk? Can you all say that? The three components of audit risk are control risk,
Control risk,
Inherent
inherent
risk,
risk,
Risk
and
detection
detection
risk.
risk. So people now, without seeing it, like I'm just moving the page, otherwise you will keep seeing the slide. Let's try to understand and please hear me out. People, audit risk was inappropriate opinion, right? Audit risk is that the auditor will give inappropriate opinion, right? So what does it mean? What does inappropriate mean? Inappropriate opinion means that, okay, let's say I am an auditor. I come and audit HR and payroll process of ABC company, and I am giving a satisfactory rating to HR and payroll process, but actually there are fictitious employees, high amount of salary that is getting processed, fictitious T&E expenses that is getting processed. So I'm giving assurance to the management saying that, okay, the area is satisfactory. There's nothing which is inappropriate going on in a way. But actually, there are a lot of frauds, lot of fictitious employees, lot of fictitious payments that are happening. This is where what has happened. The audit risk was that the auditor has given an inappropriate opinion, or vice versa. Vice versa. I have said to the management that, okay, the in the HR and payroll area of ABC company, the output is sorry, the audit results are unsatisfactory. Everything is going incorrect, right? Everything is incorrect in a way. We have put up that as a picture, but actually there are things which is going on in a satisfactory way. In both the cases, it's more like an audit risk that we as an auditor are giving an inappropriate opinion. Are we clear? First of all, what is audit risk? And an audit risk is auditor giving an inappropriate opinion. Are we clear on
Arpit,
this?
the second thing, vice versa, I didn't understand.
So Sheila, think it this way that, okay, let's say you have went to the management of the company and you
Okay.
said that the area is unsatisfactory, right? Let's say
Mm,
HR and payroll area is unsatisfactory. What does unsatisfactory mean? That it means that there are a lot of issues in the
right.
department. There are no clear policies. There are maybe salaries are getting extra processed. Some maybe you have looked at
Mm,
100 samples, and out of which you have looked at two. You have identified two cases wherein there were incorrect salary that got processed. But let's say in order to extrapolate your
mm,
outcome and show a better outcome, you have minimized the sample to 10, and then you said 10 out of 2 is the problem that has come, and which has led to like a 20% risk in your entire salary processing. So you have created an aura, or you have created an image that this process in this department is not working effectively. Very well done sometimes, right? Due to extrapolation and all. Now what happens in this case? In case when we create such kind of a picture to the department management is concerned now, right? When you say
right.
20% risk versus a 2% risk, there is a huge
Mm,
difference, right? So let's say you have
mm,
highlighted as a 20% risk, right? And you have given an opinion as unsatisfactory, but actually things are working fine. It's just a 2% delta that we're talking about, a minor
right.
issues. Now, what has happened? Management will put as resources to see whether though actually there is a 20% gap across all the areas. And then
Mm,
later on identify, oh, what the auditor said is not correct. Auditor said it is 20%, but it is less than 2% that we have seen over the transaction. But there's a lot of time that had got wasted, right? Because someone will then review so much of transactions, right? Or someone
right.
will all of that. So any which ways, the idea is auditor has given an inappropriate opinion, right? The
Yeah.
risk is that we have given an inappropriate opinion. It could be giving a satisfactory, but it is unsatisfactory, or giving unsatisfactory, but things are going satisfactory. In both the cases, in a way, we are giving an inappropriate opinion. The better way of doing it is, okay, let's say we are giving unsatisfactory and it is unsatisfactory. We are giving satisfactory and it is satisfactory. Are you getting it? So that is
Right.
the right opinion. Are we clear now?
Yeah.
All right.
Arpit, Sanjeev here.
Please go
Uh,
ahead.
whether we can also say material surprises after the audit is done is
Mm-hmm.
also audit risk. For example, let's say the physical verification was done, but there
Mm-hmm.
was a material shortage which was not detected by the auditor at that time. So it was a surprise. So this is also audit risk because we're not giving any opinion over here.
I could not understood the last one. So physical verification after the
So
audit.
physical verification went on, and there was it was shown that there is no deviation.
Okay.
But actually, at the time of making purchases, it was found that there is a book stock is there, but physically the stock is not there. And
Okay.
the
So
audit happened just say 15 days ago. So there was a surprise. The auditor is saying that there is no deviation.
I'll repeat your example. Sorry, Sanjeev. So you're saying during the audit there was no deviation noted,
No,
and
no.
after the audit.
Let's say I'll explain. There was an internal physical verification of stock. Say
Okay.
item A.
Okay.
It was shown that there is 100-unit book stock. Physically also 100 unit is there. There is no deviation.
This auditor has
Signed by
checked.
everyone. After 15 days, when at the time of making purchase, when the material resource planning is being done, it was found that physically the 100 unit is not there, just 20 is there. Then it was seen that the internal audit verification happened 15 days ago. At that time, the stock was shown as physical 100. So there was
Right.
a material surprise. I'm not going into the detail who went wrong, what went wrong. Is
So
this also audit risk?
no, no, in my view, it is not an audit risk, because if you see, auditor has not given an appropriate opinion. Now, let's take an example. There could be a lot of, we'll have to get into the reason only, then only we'll understand. Let's take an example. It was colluded. Think it this way, that it is colluded, right? Someone in the stores team has actually put it there just to manage the physical verification time when the auditor would have come. And let's say between finance team, source team, they have shown it such a way that, okay, let's get through the audit process, and later on we'll see what needs to be done. So if it is colluded, something like that, it is not an audit risk really. But let's say if we have just based on presumption has just updated the quantity which is not actually there, then it is like, yes, we are giving an inappropriate opinion in that case, right? So we'll have to see. See, audit risk is point of time when we have given the opinion, right? It's more like a point of time. If something has happened later in the next 15 days, let's say the item has gone stolen, or someone has there's a theft, spillage, whatever it is. In that case, what we can do? We cannot do anything. We need to have our work papers in place. So audit risk is inappropriate opinion when we have given it.
I'm just what I'm sharing is just a practical example,
Right.
the real life example.
I
So
get it. I get it. So in
So
this
what
case,
happens is that when you go to a large 24 into 7 plant, process driven plant, where there are so many 60,000 spare parts or material is there. So you have to rely on the stores person who will tell you the material is in this warehouse 1, 2, 3, 4. And the auditor will have to follow. At that time, the auditor cannot apply the judgment because he does not know. He has to rely on something.
right.
Now, it's sometimes the person says there is a difference. Then the person says it is in warehouse 2. Then he says in warehouse 3. It is very difficult to keep track. And then the auditor finds, okay, at the time of reconciliation, the stock is tallying. But sometimes it does not happen. So there are chances of material misses. So I just
Yeah,
wanted to
so
know
so
that.
yes, yes. See, if that is happening, this is very good point. See, in that, if during the checking these problems are coming, then yes, this is audit risk. But I earlier thought in a different way. Earlier, I thought that, and this is what we will talk about when we'll talk about controlled risk and detection risk. So we'll try to understand it there. But basically, the example that you picked it up, you can say that, okay, let's say things are very complex, we have less time, in that case, it all may lead to audit risk, right? Of course it may lead to audit risk. But I earlier thought your example, Sanjeev, when you picked it up, I thought that you said that, okay, there was a book stock versus physical stock was matching. When auditor checked 15 days down the line, it was not seen, the item was not there. Now are we saying that the auditor has given an inappropriate opinion of, like, let's say satisfactory during when the report was result 15 days back, auditor is incorrect? The answer is probably no, because the work papers are in place and evidences are there. Now, if it is next 15 days, if anything has happened, we can't do much.
My apologies. I could not
Yeah,
explain earlier
yeah, yeah. No,
properly.
no, no, no. It's completely fine. So I think the now if you're saying that, okay, the complexity of the work is such that, okay, we are not able to do it and all, then yes, of course it can lead to inappropriate opinion, us we issuing it inappropriate opinion, right?
Thank
Absolutely
you.
correct.
Thank you.
Very good. So I think audit risk is very clear, right, everyone? Simple. Inappropriate opinion by the auditor. Satisfactory, physically unsatisfactory, actually unsatisfactory. Unsatisfactory, we have opinion, or actual situation is satisfactory, right? Whatever it is, it's an audit risk that we have given an inappropriate opinion. Now, audit risk has three components: control risk, inherent risk, and detection risk. Can you all say that? What are the audit risk components? Can you all say that? Control risk, inherent risk, and
Detection.
Detection risk.
detection risk. People, we have all understood this risk in the previous understanding. So control risk is what? That the control will not be able to prevent or detect whatever it has been implemented for, right? So what is control risk? Control risk is that the control will not be able to prevent or detect. Can you all say that? Control risk is
Prevent or
what?
detect.
Prevent or detect what it has been implemented for. And
Oh.
what is inherent risk, everyone? Inherent risk is risk without control,
Any
right? Risk,
response?
without risk response, simple word. And detection risk is what? Detection risk is that the auditor will not be able to detect it, right? Simple. Detection risk is what? Auditor will not be able to detect it,
Detect.
right? See, inherent risk is without control, right? So it is always going to be high, right? Inherent risk is without control, it's always going to be in a way high. Now, there is an inverse relationship between a control risk and detection risk. People, can you all say that? What is, and if you see, there is a auditor response to assess risk and control risk relationship with detection risk. So control risk relationship with detection risk is what? It's an inverse relationship. Can you all say that? Control risk relationship with detection risk is, can you all say that?
Inverse relationship.
It is inverse relationship. What does it mean? People, Please hear me out. This is very, very important element of the class. Can I quickly see yes on the chat box before I speak the next sentence? Because that's very, very important for exam. So can I request you all to please put yes on the chat box? Are you all with me? Shiraj, Ankit, Ashwin, Barkha, Bindya, Deepak, Manali, Manish, Nikita, Nitin, Piyush, Radhika, Ramakrishna, Ranjana, Raghu, so Rohit, Sachin, Sanjeev, Shakti, Shiva, Umashankar, Unmesh, and Yashash. Are you all with me? All right, great. I think every one of you are with me. Now let's talk about it. People, we are talking about control risk was what? That the control will not be able to detect or protect. If the control risk is high, what does it mean? If the control risk is high, what does it mean? That there are high chances of control not being able to work. Do you all agree with me, yes or no?
Yes.
Agree.
Control risk being high, what does it mean? Control risk being high means that there are high chances that the control will not be able to detect or protect, right? Is that correct? Is my sentence
Correct.
correct? Yes or
Correct.
no? So
Yes.
control risk is the risk that the control will not be able to work. If control risk is high, it means that there are high chances that the control will not be able to work. If there are high chances of control not being able to work, do you think there will be a lot of errors happening? Do you all agree with
Yes.
me? If the
Yes.
control is not
Yes.
working properly and there are high chances of control not working properly, do you think there will be high chances of making there will be lot of errors?
Yes.
There will be lot of exceptions. And if there are a lot of exceptions, do you think it will be difficult to detect by the auditor or it will be easy to detect?
Easy.
Difficult to
If
Easy
there
to
are if there are a lot of
easy
errors
to
that
detect.
if there are a
easy to
lot of
detect.
errors in the data, it will be easy to detect. So what happens? In that case, your detection risk will be high or low.
Low.
If it is easy to detect, what was detection risk?
Low.
What people let's
Low.
talk about. Let's go one
Low.
by one. Control risk means control will not be able to work. Detection risk means auditor will not be able to detect. Are we clear so far? Control risk is control will not be able to detect or protect. Or detection risk is auditor will not be able to detect. And we are talking about an inverse relationship. What does it mean? If the control risk is high, what does it mean? Can anyone from the class tell me? Control risk is high means that the control will there are high chances of
Control will not able
Control
to
cannot
detect Control not working
or
properly.
prevent
Prevent
this.
problems.
control will not be able to detect or protect. If the control will not be able to detect or protect, there are high chances of more errors happening, right? More exceptions, yes or no?
Right. Yes.
Yes.
So
Yes.
if there are more exceptions, there are more errors. Do you think as an auditor it will be difficult to detect or it will be easy to detect?
Easy to detect.
Of course, it will be
Easy.
easy to detect. If it is easy to detect, do you think detection risk will be high or low?
Low.
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 Detection risk will be low. So that's why what
Low.
we've learned, if the control risk is high, your detection risk is low. And
Low.
let's take a reverse methodology. If your control risk is low, what does it mean? What does the control risk low means? That there are less
Controls are
chances.
working
Controls
fine.
are effective.
Good controls.
Controls are good controls, right? Good
Con-
controls are working effectively. There are less chances of errors. If there are less errors, less exception, do you think it's difficult to identify them? Yes or no?
Yes.
Yes. Yes.
It will be difficult
Yes.
to identify. If it is difficult to identify, your detection risk is high or low?
High.
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 Detection risk
High.
is high. So people, this is very, very important for the exam. In the exam, if you see, okay, the control risk is high, the SS control risk is high, how will it impact on the detection risk? Will your detection risk be also high or your detection risk will be low?
Low.
It will be low. And let's say if it says if your detection risk is assessed to be high, your control risk will be low or high? Detection risk high is control risk is what? Low or high? People, detection
Low.
risk being high,
Low.
control
Low.
risk is
Low.
low,
Low.
right? Simple,
Low.
Low.
inverse relationship, right?
It's an inverse relationship. Yeah.
Right? Clear everyone? Yes or no? Are we clear with the this aspect? This is very, very important for
Yes.
exam. All right.
Yes.
So now let's go back to this concept, people. What is audit risk? Can you all say that? Risk that an auditor express an inappropriate opinion on materially misstated financial statement. People, this word materially misstated financial statement is more for an external auditor, statutory auditor. For internal auditor, we can also express an inappropriate opinion on the audits that we do. Not necessarily it has to be financial statement. It could be a operation audit. It could be a compliance audit in which we can give an inappropriate opinion, right? So we don't have to learn that okay, inappropriate opinion has to be materially misstated financial statement. That is more like more audit risk for an external auditor. For an internal auditor, audit risk could be inappropriate opinion on any operational engagement, any compliance engagement, any environmental audit engagement, whatever we have learned in the past, right? So it is an inappropriate opinion on what we conclude basically. People, inherent risk is what? Can you all say that? Inherent risk is suspectability without controls. Can you all say that? Inherent risk is suspectability
Suspectability without
without
controls.
controls. And then control risk is control will not timely
Timely
prevent,
prevent.
detect, or correct. And detection risk is audit procedures will not be able to detect material misstatement. People know what is under auditor's control: inherent risk, control risk, or detection risk. Can as an auditor, can we control the inherent risk of a process?
No.
No. Can we control the control risk of the process? Are we responsible to manage the controls?
No.
But can we
Yes.
when can we influence, or can we take a can we do something on detection risk by applying more engagement procedures to an
Yes.
yes?
Yes, we can.
So what is under the control of auditor? It is only the
Detection
detection
risk.
risk, right? So auditor responds to assess risk and control risk relationship with detection risk. Only detection risk is under the auditor's direct control. Now, people, this is a multiplication that is given. You don't have to think that way. There's no formula driven question that will be asked in the examination, but you should be knowing detection risk and control risk has an inverse relationship. And what is under the direct auditor's control? Can you all say that? Auditor's direct control is what? Can you all say that once again? Auditor's
Detection
Detection
risk.
it is
risk.
the detection risk. So, people, this is the simple concept in terms of the risk-based audit plan. We have things to remember that I'll cover it later, but these are the simplest concepts that we were supposed to be in the risk-based audit plan. A very, very small chapter. We have understood how a risk-based audit plan is prepared via an Excel. We have looked at the audit risk and its components. We've talked about the inverse relationship, and now communicating and reporting to senior management and the board is a very simple topic. That this risk-based audit plan that we have prepared has to be reported to the senior management and the board for approval. And CA's duties to report also have something which is talking about what Yashas has asked, that okay, what about if the risk is accepted which is beyond the risk appetite, right? Of the organization. In that case, the first thing that we'll do is report to the audit committee, report to the regulator, or we'll first discuss with the senior management. What did we learn? We will first discuss with the
Discuss
Discuss
with
with the
senior
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 management.
management, right? So this is all that we're going to learn, people. Before we get into the things to remember section, what we'll do is first quickly we'll go through the concept of internal audit plan with the glim content, and this is a very small unit, so we'll do it quickly, and then everyone will also look at the things to remember and practice the MCQs. I think it is all doable. So let's quickly start with the concept from the glim content. So the employment plan, the three subunits that we spoke about it last unit of the domain one. Learning objectives, you already know. Let's start with the risk-based audit plan. So people, we all know what is risk. Risk is the possibility of an event occurrence that affect the achievement of objectives. It is measured in terms of impact and likelihood. Employment plan, people, can you all read it? Everyone, I would request you all to please read out the highlighted section. I've already helped you to understand the concept, but now you all need to read out so that it retains to your mind also. Can you all read it? At least the highlighted section, I want you all to read it. Employment plan, can you all read it? The employment plan.
The entire plan
The
sets
internal audit plan
priorities for
sets
the
priorities
internal
for
activities
internal audit
individuals
activities,
perform
engagements
based on
performed
an
based on
understanding of the
understanding of the
organization's
organization's
strategies,
strategies,
risk
objective, risk, and risk management procedures.
Right. So internal plan set priorities for the employee activity engagement performed based on the understanding of the organization strategies, objective, risk, and risk management procedure. It is established by whom? Can you all say that? The employee plan is
CAE after
established by CA
consultation with senior
with senior
management
management and
and
the
the
board.
board.
The choices and priorities of the engagement are based on needs, risk, and potential effects of the organization. Priorities based on the risk assessment. It says the audit plan of any employment activity must reflect the organization assessment of risk found in large, complex, and interconnected organization. In the modern economy, the knowledge, skill, and other competencies of the employer determine what engagements can be performed without using external service provider. Now, people, let me ask you a very important question. Do you think when you do risk assessment, like the risk assessment thing that you look at in the risk-based audit plan, you will do a risk assessment based on the knowledge skill set that is available in the team, or you will look at the risk assessment based on the that are the risks that are applicable to the company? What do I mean? I mean to say that
Applicable to the company.
okay, let's take an example. My team doesn't have a knowledge of cybersecurity. So should I avoid cybersecurity as a risk to be part of my risk assessment? What do you think?
No.
Or
No.
it should be very well part of the risk assessment, right? There could be cyber attacks for the company. I may not have the knowledge. And for that, what did we learn? If we don't have the knowledge, skill set, and competency, what do we do? What do we
We
do,
can
people?
hire.
We can always engage external service provider, right? And that could also be part of your plan, by the way. When we looked at the risk-based audit plan, let's take an example, the same risk-based audit plan. Let's take an example here. We come up with treasury management, which is, let's say, into forex, hedging, a lot of complex stuff is there. And let's say we don't have the skill set in the team who will probably check it, right? In that case, we can probably say that, okay, this engagement will outsource. We can bring that outsource element also in our audit plan also, right? So it's not that it has to be always, I mean, it all depends on how do we want to put that across in front of the board, and what is the clear expectation, and if it outsource, what will be the cost. So that all could also be part of the plan. So here it says the knowledge, skill, and other competencies of the employers determine what engagements can be performed without external service providers. Performance Standard 2010 talks about planning. It says the CAE must establish a risk-based plan to determine the priorities of the employment activity consistent with the organization goals. Can you all say that? What is planning, everyone? What does the Performance Standard 2010 talks about? It says planning is the CAE must. Who should establish a risk-based plan? It is the responsibility of
CAE.
the CAE,
Yes.
and why it is
Determine the
why to
priority.
determine the priorities of. Please go
I
ahead.
activity consistent with organization's goals.
Right. To comply with the standard above, the audit plan must be logically related to identified risk of the organization, its strategic plan, and operational goals. The connection of the risk and goals is a requirement of the risk-based audit planning. People, it says the purpose of establishing an audit plan is to ensure adequate coverage of areas with the greatest adverse exposure to the organization. However, now this is a very important line. Can you all say that? Should we cover low risk audits also to be part of the plan, or should we not? So the answer here is, can you all say that lower risk audits may be included to confirm that risk have not changed? Can you all say that, people, should you be considering the lower risk audits in your audit plan? The answer is
Yes.
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 To
Yes.
see when you do the next time risk assessment, you see that whether the risk level has not changed, right? So can you all read the highlighted part? Lower risk audits may be
May
May
be
be
included
included to
to
confirm that
confirm that
confirm
the
their
that the risk
risk
has
have
not
not
changed.
changed. Thus, results of prior engagements are also relevant. Like I think someone told us, right, that okay, one of you said that okay, should we consider the prior engagement results also? Yes, that is also relevant. Accordingly, the priorities of the employment activity are based on the results of what is employment activity is based on what? The results of. Can you all say that? The answer is
Risk
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 assessment.
assessment.
assessment. The CA generally should assign engagement priorities to activities with higher risk, of course. Setting priorities help to ensure the allocation of available resources that best meets goals. Employee should be able to meet its objective within given operating plans and budgets, including measurement criteria and target dates of completion. The CA should have ongoing consultation with the management and the board. The result may be a revision of the risk assessment and audit priorities as a result of the operation organization change. The importance of basing the audit work plan on a systematic assessment of risk is emphasized in the following interpretation and implementation standard. Interpretation standard, it says, to develop the risk-based audit plan, the CE consults with senior management and the board and obtain an understanding of the organization's strategies, key business objective, and associated risk and risk management process. The CE must review what? Can you all say that? The CE must review what? Can you all say that? The CE must
Adjust
review
the plan as
and
necessary in
Necessary
response
response
to
to
change
change.
in the organization's business, risk, operations, program,
program,
system,
system,
and
and controls,
controls.
right? So, like we have understood, right? As part of the risk assessment that happens on a yearly basis, we need to see if there is any change in the business, risk, operations, new system has come up, new programs have been taken, any new controls that have been implemented. All of that we can look at to when we are looking at the internal audit when we are preparing the annual risk assessment plan. And that brings to the next point. It says the employment activity plan of engagement must be based on what? Can you all say that? The employment activity plan of engagement must be based on documented
Documented risk
Documented risk
assessment
assessment
Assessment.
undertaken at
undertaken
least
at least
annually.
annually.
annually. The input of senior management, the board must be considered in this process. It says in developing the risk-based plan, the employment activity ordinarily reviews and corroborates the result of risk assessment performed by senior management. Let's say if there is a risk assessment that is done by senior management, should we just ignore it, or we can use it and then further develop it? Should we just ignore it, or we can use it? We can
Use
always
it. We
use
can
it,
use
right?
it.
So it says we can corroborate the results of risk assessment performed by the senior management. The key input in evaluation of the risk is what? Can you all say that? The key input in the evaluation of the risk is the internal auditors professional
Professional judgment
judgment
about
about
exposure
exposures
and
and
likelihood.
likelihoods, right? Moving on, it says planning also involves considering what service stakeholders want and where operating benefits are more likely to be available. The CE must identify and consider the expectation of senior management, the board, and other stakeholders of employed opinions and other conclusion. Planning for consulting services involve considering what benefits that engagement may offer. The CE should consider accepting proposed consulting engagements based on the engagement potential to improve management of risk, add value, and improve the organization operation. Accepted engagements must also be included in the plan. Can you all say that? Consulting engagements which are formal, written, continuous, and which are accepted also because we believe that will add value, can be included in the plan? The answer is yes, we can include that
Yes.
also in the plan. Consulting engagement use employed resources. The benefits of a consulting engagement therefore must exceed its cost, including the opportunity cost of potentially not conducting an assurance engagement. The goal of the employed activity should be capable of accomplishment within given operating plan and budgets and should be measurable to the extent possible. They should be accompanied by the measurement criteria and target dates of accomplishment again. People, moving on to risk-based audit plan, it says developing the plan often follows developing or updating the audit universe. What is audit universe, people? Can you all say that? It is compilation of what is audit universe?
Subsidiaries,
The
business units,
auditable areas.
departments, groups, processes, or other established subdivisions of an
Organization
organization
that
that
exists to
exist to
manage
manage one
one
or
or
more
more
business
businesses, right? So basically, audit universe, you're saying it's a compilation of all subsidiary, your business unit, your departments, your groups, your processes, your other subdivision, everything. It's basically audit universe is all auditable risk areas that may include the organization strategic plan. It may reflect the organization business objective, attitude toward risk, difficulty of reaching objectives, result of risk management, operating environment. Just read it, nothing critical here, people. A documented risk assessment defines the audit universe and its assessed risk and potential effect after input from senior management. The audit universe include what? Again, can you all read it, everyone? The audit universe include all business
All
units,
business units,
processes,
processes, or
operations
operations that
that
can
can
be
be evaluated
evaluated
and
and
defined.
defined.
They include
They
They
include
include
accounts,
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 divisions,
divisions,
functions,
functions,
procedures, products,
procedures, products,
services,
services,
programs,
programs,
systems,
systems,
controls, and
controls,
any other
and many other
possibilities.
right?
possibilities.
Everything that is auditable in simple word. The audit plan include audits requested by management and the board audit committee or required by the regulators as a condition of receiving government contracts. Many entity operations or functions are audited cyclically. Accordingly, the priority of an audit may depend on how recently a specific operation or function has been audited. The audit universe should be assessed again. What is the minimum frequency to assess the audit universe? It's part of your
Annually,
risk
Annually,
at
assessment.
least
Again, at
annually.
least annually to reflect the most current strategies and direction of the organization. More frequent updating of audit plans may be needed to respond to changes in circumstances. The internal audit activity audit plan is based on what? What did we learn? Employment activity audit plan is based on the audit universe, input from senior management and the
Senior
board,
management
and
and
assess
assessment.
risk. Employment plan usually is prepared for what? People, can you all read it? It is prepared for an annual period,
Period.
but it might be for a rolling 12-month cycle or 2 or 3 years with annual evaluation. Like we saw the employment plan, right, in an Excel file. It was for 3 years, right? But it is firm for the first year, and then of course it could follow an annual evaluation to see for the next year and third year. Is that clear? And can you all read it? An audit plan usually is prepared for what? For an
Annual
annual
period,
period,
but
but it
it
might be
might
for
be
a
for rolling 12-month
Rolling
cycle,
12-month
but for
cycle or two or
two
more
or more
years
years
with
with
annual
annual
evaluation.
evaluation.
the plan most often includes a set of proposed assurance and consulting engagement, the basis of inclusion of each engagement, risk of time lapse from the most recent audit, the objective and scope of each proposed engagement, and the projects derived from the employment activity strategy. So again, people, it says the IIA has historically tested candidates understanding the audit universe and the final audit plan, be able to distinguish the difference between them and know how often they should be assessed. Now, people, this is important. I hope you're clear. Audit universe and audit plan are two different things. Do you all agree with me? Audit universe is all auditable areas. Audit plan is includes the which auditable area we have to audit at what frequency based on the risk assessment that has been done, right? And what is the frequency at which we need to evaluate our audit universe as well as do the risk assessment? It is
Annually.
Annually.
annually. Key audit objectives are to provide assurance. Again, what is the audit objective? Do we need to provide absolute assurance or reasonable assurance?
Reasonable.
Reasonable assurance.
So key
Reasonable.
Reasonable
audit objectives are
assurance.
to provide reasonable assurance and information to senior management and the board. Assurance includes an assessment of risk management activities. People, it's moving on. It says work schedules are based on, among other factors, an assessment of risk and exposure. Most risk models address inherent internal and external risk using risk factors to set priorities. Internal risk factors include quality of an entrance to controls, degree of change, timing and result of last engagement, impact, likelihood, materiality, asset liquidity, etc. For example, a subjective group consensus of personal matter may avoid the risk of an extreme judgment by a single evaluator. Just read it. We are talking about internal risk. External risk could be competitor action, supplier prices and quality changes, industry issues, employee and government relations issues, and unexpected significant change in an account that cannot be explained increases risk. This is important, people. Can you all read it? What will increase the assessed risk? Can you all say that? An unexpected significant change in an account that cannot be explained increases its assessed risk. Let's take an example. There's a sudden increase in an expense of TNA. Do you think that will increase the risk of that area? Yes or no? Let's take an example. There's a sudden wastages that have increased. Do you think you will probably start focusing as an assessed risk? The assessed risk will be high on that area. Yes or no? What do
Yes.
you think? Right. So can you all read it? An unexpected significant change. Can you all say that?
In an account that cannot be explained increases
Increases
its
its
assessment.
asset risk. People, I think we are all clear with what is risk management process, but it now covers risk management. It says each management plan must consider the organization. Understanding of the risk management process a vital component of the planning process. Risk management identify, assess, manage, and control potential event. We all know the definition of risk management that provide reasonable assurance regarding the achievement of objectives. Risk management is critical to sound governance of all organizational activities. Consistent risk management should be fully integrated into management at all levels. Management typically uses framework COSO ERM ISO 31000, something that we've covered in the part one. People, COSO ERM ISO 31000, these are not important for the part two. Please take a note. Don't get bothered that okay, here is COSO ERM mentioned, ISO 31000 mentioned, it is in the part one, so there will be a lot of question around the COSO ERM ISO 31000 in the part two. No, for that part one exam test, here it is just talking about it, and that's why if you see, I've not even highlighted this section, right? So you will generally not see too many questions or not even any question on the COSO ERM and ISO. Ideally, it is not expected of in the part two to come questions around the COSO ERM or ISO 31000 because that is any which was tested in the part one, right? It is more just giving reference to what we have, what is there in the part one. So don't worry, people who have just straight away come to the part two, have not gone through part one, and who don't know COSO ERM ISO 31000, you don't have to get into that. So don't worry about that. Is that clear? Can I see yes on the chat box, please? Everyone, is that clear? Yes or no? Can I see yes on the chat box? You don't have to study COSO ERM ISO 31000 for the part two as such. All right. I'll move forward. The CAE considers the organization risk management framework. If a framework does not exist, the CAE assess risk after consultation with senior management and the board. Effective risk management assists in identifying key controls related to significant inherent risk. What is inherent risk, people? Now, this is important. People, in inherent risk, are we looking at only internal risk or we also cover external risk? Internal and external both without control, or is it only internal without control? Or is it only
Both.
external without control?
Both.
Both without control.
People, can you all read it? This is important line. Can you all say that inherent risk is the combination of internal?
Internal and external risk factors in their uncontrolled state or the existing gross risk, assuming no internal controls are in place.
Right, this is very, very important. So inherent risk is the combination of both internal and external risk factors in their uncontrolled state or the existing gross risk. This is also known as gross risk, or something like inherent risk is without any internal control in place. For example, cash and asset equally converted into easily converted to cash, such as precious metal, have high inherent risk. Control often is used to manage risk within the. Can you all say that? Control often is used to manage risk within the, so that the risk is
Risk appetite.
within the risk appetite. What is risk appetite, people? The level of the
The
risk
level
that
of risk that an organization is willing to accept.
accept. What was risk tolerance, people? Risk tolerance is the acceptable variation in the performance relative to achieving objectives, right? So one level low. Current risk is the risk managed within existing controls or control systems. So current risk, or you can say net risk. Key controls must operate effectively to reduce a significant risk to an acceptable level. Control are processes that address risk. Effective risk management identify key controls based on the difference between inherent risk and residual risk across all affected system. Residual risk was what, people? Can you all say that? Now this is again highlighted. Can you all say that residual risk is the portion of inherent risk that remains after
After management execute the risk
risk
response.
response? It is also known as net risk. When identifying key controls, and if risk management is mature and reliable, the internal writers looks for, can you all say that, individual risk factors when the reduction from inherent risk to residual risk is significant. So Sanjeev, here this is for you. Can you read that? Sanjeev, can you please read that? Individual risk factor.
Factors when the reduction from inherent to residual risk is significant, particularly if inherent risk was very high.
Control that mitigate
a large number of risks.
So what did we learn? If you go back on our risk-based audit plan concept, what did we talked about it? When identifying key controls, please read this once again. Everyone, this is for everyone, not just for Sanjeev, but just emphasizing because Sanjeev asked that question during the risk-based audit plan. So Sanjeev, let's read this out. When identifying key controls, the employer look for what? Individual risk, right? Risk factors, individual risk line items, think it that way, where the reduction from inherent to residual risk is significant, where the gap between inherent risk and residual risk is high. So because then that control becomes very important. Like we discussed, right? If the inherent risk is high, or let's say critical, and after the control it is, let's say, low, it means that whatever risk response is there, the control what is there is very, very important, right? That's why it is reducing from a critical to, let's say, low, and that becomes an area to be tested. Make sense now? And let's say controls that probably mitigate large number of risk. If there are controls that will mitigate large number of risk, means that control is very, very important to be tested. Otherwise, it will impact so many things, right? So that's why it says when identifying key controls, employers should look for these aspects. Is it clear, everyone, now? Is it clear to everyone? Yes? All right,
Yes.
great. Moving on, it says employers audit key controls and provide assurance on the management of significant risk. Again, do we need to verify all risk or significant risk? What did we learn in due professional care? Management of significant risk or all risk?
Significant risk.
Significant risk. When planning individual audits, the employers identify and assess risks relevant to the specific engagement. They consider risk at current and future events, of risk of current and future events, effects on the organization objectives and causes. Employee plan normally focuses on what? Now, this is again important. Can you all read it, people? This is very, very important. Internal audit plan normally focus on what? Unacceptable current risk,
Current risk requiring management action, control system on which organization is most reliant, large differences between inherent risk and residual risk, very high inherent risk.
Very high inherent risk. Right? So people, I think this is very self-explanatory, but very, very important to for exam. So you need to remember an employment plan normally focus on what? Unacceptable current risk, which requires immediate management action. If that is there, you need to put that in the plan. Think it this way. Okay, let's take an example. External auditor has highlighted inventory mismatches, right? And they're very concerned about inventory as part of their annual attestation exercise. Do you think you will consider that in your plan? Yes or no?
Yes.
Yes or no? Let's take an example. There is a data privacy failure that has happened in the recent past, right? Or a ransomware attack that has happened. Do you think a cybersecurity control or a data privacy controls related aspect which requires management action, you will consider that in the plan? Yes or no? Yes.
Yes.
So what are we saying here? It says that employment plan should focus on unacceptable current risks that are there, which requires management action. Control system on which the organization is most reliant. So let's take an example. There is a Power BI dashboard or a BW dashboard kind of a thing, which dashboard is significantly important for the management? Do you think you will consider that as part of your in your audit plan, that okay, whether the data input that are getting into that dashboard is correct or not for the management decision making? I mean, whatever organization think that this is very, very important for them. Do you think that was important and relevant? Will you put that in your plan? Yes or no?
Of course.
Of course, right? So unacceptable current risk control system on which organization is most reliant, large difference between inherent and residual risk, and very, very high inherent risk. All of these are something that you will consider in your audit plan. Due professional care requires work assignment to be proportional to the complexities of the engagement and assign employers to have the knowledge, skill, and other competencies to perform their responsibilities. So, of course, due professional care. Let's say for a low risk area, do you need to do you need to do extensive testing? Probably the answer is no. But let's say something which is high risk area, do you need to be more careful, apply more engagement procedures comparatively as compared to low risk areas? The answer is yes, right? So it depends on the complexities of the engagement. People moving on to risk modeling. I think this is simple. Rank and validate risk priorities. It says risk modeling ranks and validates risk priorities for engagement in the plan. Risk factors, impact, and likelihood may be weighted based on professional judgment to determine their relevant significance, but the weights need not be quantified. The simple model and the resulting risk assessment processes as below. We've talked about it, people. Risk A, B, C, D. So which one is risk D? It is like a high catastrophic risk. Risk B is medium risk. Risk C is here. D, minimize low risk. So these are the three levels. Now again, people, what did we cover here? Risk D clearly as risk D is more prior than risk C. Risk C is more prior to risk B, and between risk A and risk B, it depends on the culture, right? So it says choosing the higher priority between risk B and risk B is matter of professional judgment based on the organization risk assessment stated priorities. If more likely threat is considered, then risk B is important. If it is impact is critical, then risk A is considered. So again, just read it. Nothing. It's not that the same question will be asked. It's just that impact and likelihood we should be knowing it. So I'll move on to the important part, people. Audit risk and its components. This is very, 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 very important for the exam. As I said, people, can you all read the highlighted section? Audit risk is what? Once again, audit risk is the risk of reaching
invalid audit conclusions or providing faulty advice based on the audit work.
Right, so it's basically an inappropriate opinion in incorrect conclusions. If in an employed context, audit risk is a risk of providing senior management and the board with flawed or incomplete information about GRC process. Inherent risk is what? People, can you all read it once again? Inherent risk is the combination
of internal and external risk factors in their uncontrolled state or the existing gross risk, assuming no internal controls are in place.
In an employed context, inherent risk is a risk arising from the nature of the account or activity under review. For example, accounting estimates are inherently riskier when estimation uncertainty increases significantly. Another example is the risk that advances in technology may render inventory obsolete. Again, just read it. Control risk is what? Can you all say that? Control risk is the potential that controls will
fail to reduce controllable risk to an acceptable level.
Right. Again, internal context on control risk is a risk that the system of internal control designed and implemented by the management will not achieve management objectives for the account or activity under review. What is detection risk, people? Can you all say that? Detection risk is the risk
that audit procedures intended to reduce audit risk to an acceptably low level will not detect a material misstatement.
Right. So in an internal audit context, again, detection risk is the risk that the auditor will fail to discover a condition relevant to the established audit objectives or the account or activity under review. The components of inherent control and detection risk may be assessed in quantitative or non-quantitative term, high, medium, low. Again, just read it. Of the three components, people, what is under the direct auditor's control? People, it is only the
detection risk.
Auditors must first determine the levels of inherent and control risk for the account or activity under review. Detection risk is then adjusted to achieve an overall acceptable level of audit. Again, just read it, people. If inherent control risk both are determined to be high, detection risk will generally be. If the control risk is high, detection risk will be. Can you also that? Can you also that if the control is high, the detection risk will always be low. If you read this out, it says after gathering evidence during an audit, the auditor decided to increase the assess control risk from the level originally planned. People, it says what? Increase the assess control risk. What does it mean? What comes to your mind? Increase the assess control risk. Detection risk will be high or low?
Low.
Increase the assess control risk. So if you read this out, after gathering evidence during audit, auditor decides to increase the assess control risk to achieve the same overall audit risk as originally planned. The auditor should decrease the assess detection risk. So basically, originally planned, auditor should think it simple. If the assess control risk is high, simply the assess detection risk will be decreasing. That's right. Row. Audit risk is a function of inherent risk, control risk, and detection risk. The only risk that auditors directly control is, can you all say that?
Detection risk.
Detection risk has what? Can you all say that? Inverse
relationship
with control risk. Accordingly, if the auditor chooses to increase the assess control risk, again, increase the assess control risk, the assess detection risk should decrease.
decrease to maintain the same overall audit risk.
Moreover, the extent of engagement procedure must increase when acceptable detection risk decreases, right? So if detection risk decreases, what does it mean? Detection risk is low. What does it mean?
Control risk is high.
Control risks are high.
Right. Right. Very good. So I'll move forward, people. The next is communication and reporting to senior management and board. Communication to senior management and the board. Communication and approval. Performance standard 2020 talks about communication approval. It says the CE must communicate the employment activity plan and resource requirement, including significant interim changes, to whom? The CE should communicate the employment plan and resource requirements to whom? People, can you all say that? To
Senior management and
Senior
board.
management and the
Review
board for review and approval.
The CA must also
Same.
communicate the impact for the resource limitation.
Resource limitation.
If let's say they are not getting adequate resources, then CA should communicate that, okay, if you don't give me the resource, these are the possible impact. Will not be able to do audit or time, or will not be able to cover. All of that needs to be communicated. People, moving on, it says the proposed employment plan and the risk assessment are discussed with the board to communicate the risk addressed by the plan, those risks that cannot be addressed because of the resource limitation. The proposed employment plan include the following: assurance and consulting engagement, the reason for selecting each engagement. For example, risk of time lapse since the last audit, objectives and scope of each engagement, projects indicated by employment strategy but not necessarily related to audit engagements. The plan should be flexible enough to respond to changes in circumstances. Significant changes in plans, its basis or its effect must be approved by the board and senior management. Review of and changes in the plan may occur at quarterly or semi-annual board meetings also. Performance manage standard 2060 talks about reporting to senior management and the board. It says the CA must report periodically to senior management and the board on the employment activity, purpose, authority, and responsibility and performance related to its plan, its conformance with the code of ethics and the standard. Reporting must also include significant risk and control issues, including fraud risk, governance issues, and other matters that require attention to senior management and the board. Frequency and content of reporting to senior management and the board. People, the frequency and content of reporting are determined collaboratively by the CA, senior management, and the board. The frequency and content of reporting depends on the importance of the information to be communicated and the urgency of related action to be taken by the senior management and the board. So there's no set frequency of reporting to senior management and the board. But of course, people, it depends on jurisdiction to jurisdiction. Like in India, we have a quarterly board meetings, right? So quarterly senior management and the board needs to be informed about details, things, right? Progress of the audits and all. But there are certain frequencies that are determined. Like, for example, what is the minimum frequency to confirm that the employment is organizationally independent? Organizational function is independent. What is the minimum frequency to communicate? People, anyone? Annually. What is the minimum frequency for risk assessment to be communicated? Annually. Right. So what is the minimum frequency to confirm internal assessment under QIP? It is again annually. What is the external assessment communication to be done once in
5 years?
5 years, right? So all of that is part of CA duty to report. Let's take an example. The CA should communicate information to senior management and the board about the following: the employee charter. The CA periodically reviews the charter and present it for. Again, people, we have learned it earlier in the part 1. Do we need to review the employee charter every year, or it needs to be periodic? What did we learn? Periodic and not annually, because annually we may not be changing the charter, right? Organization independence of the employment activity. The CA, what is the frequency to confirm organization independence to the board? It is annually. Impairment to independence must be disclosed to the board. Internal plan, resource requirements, and performance using key indicators. Results of audit engagements. But the CA supervisory and reporting roles are unlikely to be include drafting final communication for engagements, engagement completed compared with those planned, gaps in audit coverage, results of the QIP. All of this is part of our responsibilities to inform to senior management, the board. We all know, right? People, significant risk and control issues and management acceptance of risk. This is very, 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 very important for exams. So can I request you all to put yes on the chat box? We are on the last page of the topic. Can I request you all to please put yes on the chat box? Everyone, last page, but very, very important. You can expect a question from this topic in the exam, and that's why requesting everyone to emphasize here. Can you all read it, the highlighted part? Significant risk and control issues and management acceptance of risk is the topic that we are talking about. Can you all say that? What are we reading here?
Significant risk and control issues and management acceptance of risk.
People, first we'll read the highlighted section and then we'll read the non-underlined section, but let's talk about it. Significant risk and control issues and management acceptance of risk. When the CA believes that senior management has accepted an unaccepted risk, the CA should do what? What is the first step? I'll repeat myself. Inform to the regulator, inform to the board, inform to the audit committee, or discuss the matter with senior management first. The answer is
discuss the matter with senior management first.
When the CA believes that senior management has accepted an unacceptable risk, the CA must discuss the matter with senior management first. What the CA should do? CA should understand management basis for the decision, identify the cause of any disagreement, determine whether management has the authority to accept the risk, and preferably resolve the disagreement. If the CA and senior management still cannot agree, what the CA would do? Can you all say that? The CA will now inform the board. And if possible, the CA and management should jointly present their positions. The CA should consider timely discussion of financial reporting issues also with the external auditors if required. Right? But otherwise, this is all important. Are we clear? People, if the examiner is saying you, the CA believes that the senior management has accepted an unacceptable risk and has also discussed with the senior management. What is the next action to be done? Now, what is the next action? Because the question itself says that the CA has already discussed with the senior management. Should go and discuss or should inform to the board now?
Should inform the board.
Should inform to the board. But let's say if the question says that CA believes that the senior management has accepted an unaccepted risk or a risk which is not within the risk appetite of the company, what should be the CA's next action? It should be discussed with the senior management first. No, should be discussed with the senior management first, right? Not the board, right? The board is next. Is that clear? Yes or no, everyone?
Yes.
Because this is where a lot of us will make mistake here, people, and this is very, very important for exam. All right. So the CA may believe that significant risk exposure and control issues will result in unacceptable internal and external risks. The risk may include control weakness, fraud, illegal acts, error, inefficiency, waste, ineffectiveness, conflict of interest, financial loss. The CA should present such concerns to the senior management. Senior management and the board determine the responses to significant issues. They may assume the risk of not correcting the reported condition because of cost or other considerations. Senior management should inform the board of decision about all significant issues raised by internal auditing. So again, we have already read the highlighted section, people. Moving on, the CA may share and discuss the content of the report with senior management before presenting it to the board. The CA report on the overall effectiveness of the organization, internal control, and risk management process to senior management of the board. All is okay. So are we clear on the broader aspect of risk-based audit plan? Yes or no, people? Yes or no, everyone? Yes. So are you now clear with what is risk-based audit plan? What is audit risk, inherent risk, detection risk, control risk? What is the relationship between control risk and detection risk? Yes or no, everyone? And what to do if the senior management has accepted and risk which is not within the risk appetite? What do you think? Are you all clear on all these concepts? Yes or no, everyone? Yes. So let's start with the things to remember, people, and then we'll do some MCQs and then we'll practice for more MCQs also. But before we go there, can you all say that the knowledge, skill, and other competencies of the employers, the knowledge, skill, and other competency of the employers do not
affect the risk assessment.
What does this line means, people? It means that, okay, the same example that we spoke about it. Let's take an example. If my team doesn't have the cyber security knowledge, or let's say we don't have a knowledge on the ESG space, or we don't have a knowledge on the data privacy, do you think that those risks we should consider in the risk assessment, or only the knowledge, skill, and competencies available with the auditor, based on that should be considered in the risk assessment? Okay, we know how to do P2P audit, so we should include P2P in risk assessment. What is the right way to do it? All risk, or just what we know?
All risk.
All risk.
All risk, right? So can you all read it once again? This line, it doesn't mean that, okay, whether the skill set is there to do the risk assessment. It says that whether the knowledge, skill set, and competencies available in the auditor should be the factor to consider in the risk assessment. So basically, it says the knowledge, skill, and other competencies of the auditors do not, can you all say that, do not affect the
risk assessment.
People, I know this is itself a confusing statement, but whenever you see this, have you got the mindset that how do you read this? How do you read this? Yes or no, people? This is because this itself is a confusing statement. Yes. Have you got the context of this line? This context doesn't says that, okay, the knowledge skill set affect the risk assessment exercise. The context here is whether the knowledge skill set that I have, should that be considered when I am doing risk assessment, or that I'll do risk assessment for this and I'll put that in the plan, or I should look at the organizational risk. I should look at the organizational risk, and the knowledge skill set that I have doesn't impact the risk assessment. In risk assessment, I need to consider all risk. Whatever knowledge skill set we have as a team, we'll do it in-house. Otherwise, we'll outsource. Clear, everyone? Yes or no? Yes?
Yes.
All right. Moving on to the next one. Key input in evaluation of risk is what? Can you all say that? The key input in evaluation of risk is the
internal auditor's judgment.
People, the audit plan is based on what? Can you all say that? The audit universe?
The
input from senior management and the board and assessed risk.
People, should we be including the lower risk audits? Yes or no?
Yes.
So can you all say that lower risk audits needs to be included in the audit plan to give the coverage
and confirm that their risks have not changed.
People, internal audit plan focuses on what? Can you all say that? On the following: unacceptable
current risk requiring management action, control systems on which the operation is most reliant, areas where the difference between inherent risk and residual risk is great, areas where inherent risk is very high.
People, audit risk is the risk that an auditor will express
an inappropriate opinion on materiality misstated financial statements.
Only what risk is under the auditor's direct control? It is the
Detection,
Under
yes.
audit
And
risk, right?
detection risk and control risk are
Inversely
Inversely
related.
Inversely.
related.
very good. People, the first question on your screen. Let's quickly cover this. People, please put direct response to me so that others don't get flooded with your messages. All right, let's do this in 20 seconds more. All right, people, last 5 seconds. Let's do this quickly. Requesting everyone to participate. I can see only 19 responses. There are 25 participants on the class. Can I request in the class? Can I request everyone to please participate? Last 5 seconds, everyone, once again. People, time management is key for this exam. Time management is key for this exam. All right. So all right, everyone. Time's up. Let's look at it. All right. So we have the first one. The first answer has been said by Ranjana. Ranjana is saying it's B. Sanjeev is saying it's B. Barka is saying it's B. Ramakrishna, Piyush, Radhika, Sachin, Raghu, Manali, Shiva, Unmesh, Bindya, Nikita, every one of you are saying it's B, right? Lovely, everyone. Very good. So what does it say? The employed manager has been delegated the task of preparing the annual audit plan for the forthcoming fiscal year. All engagement should be appropriately characterized and presented to CAE for review. Which of the following would likely to be classified as a consulting engagement? People evaluating the procurement department process, helping in design of the risk, assessing financial reporting, or reviewing ESG. What do you think? People, which one is evaluating, assessing, reviewing? These are consulting engagements or these are assurance?
Assurance.
These are all assurance. Helping in design of the risk management program. While design is consulting, right? I mean, of course,
Exactly.
it could impair is a separate topic, but design, install, implement is what? These are all part of your consulting engagement, right? So B is the right answer. Next question on the screen, please. All right, people, another 15 seconds for this. All right, people, another 10 seconds. Let's do this quickly. Requesting everyone to please participate. Last 5 seconds, everyone. Requesting everyone to please participate. I hope you are all answering. All right, everyone. Time's up. Let's look at it. So Ranjana is the first one to answer. Ranjana is saying it's D. Barka is saying it's D. Radhika is saying it's A. Manish is saying it's D. Piyush is saying it's D. Rohit is saying it's A. Nitya is saying it's D. Ramakrishna D. Unmesh D. Sanjeev D. Raghu D. Bernali D. Shankar D. Deepak D. Sachin D. Bindya D. Ashwin D. Umashankar D. Nikita D. Shakti D. Shiraj D. Yashash also D. So most of you are saying D, other than two of you were saying A. Which of the following statement about including consulting engagement in the audit plan is true? So people who have selected A, all requests for consulting engagement must be included in the audit plan, or the acceptance of proposed engagement in the audit plan is depending on the add value. So what is right, people? It is D, which is correct. So again, Radhika and I think Radhika and Rohit, right?
Yeah.
So see again, if we have received a consulting engagement request, may not be necessary. Even if we can also decline the request for a consulting engagement. That's what we have understood, right? If we think that it will not add value, so all requests for consulting engagement may not be included in the plan. Otherwise, people will flood us with the consulting engagements alone. And our core role is assurance, not consulting. Only the areas where we think that okay, it will add value, we can accept it and we can put that in the plan. Make sense? Yes or no? Is that clear, Radhika and Rohit? Yes? All right. I'll move on to the next question, everyone. This is a very nice question, everyone. All right, people, last 10 seconds. Let's do this quickly. A small question. Last 5 seconds, everyone. All right, everyone. Time's up. Let's look at it. Sorry, I think I've lost. All right, I think Ranjan is the first one. Ranjan is saying it's A. Shiraj is saying it's B. Sachin is saying it's A. Sanjeev is saying it's B. Binay is saying it's B. Ramakrishna is saying it's A. Deepak is saying it's B. Manish is saying it's B. Nitin is saying it's B. Unmesh is saying it's B. So Ashwin is saying it's D. So a lot of you saying it's A, B, and D, almost all. Barka is also saying it's D. Shakti is saying it's B. Manali is saying it's B. Yash is saying it's A. Pretty much all over the place. Like a lot of you are saying it's A, a lot of you are saying it's B, a lot of you are saying it's D. Right. So people, when creating the audit plan, the CAE should prioritize engagement based primarily on which of the following? Is it based on the risk assessment, based on requests from senior management and the board, based on when longest interval since the last examination of each audit universe item, or auditable areas required by the regulatory agency? People, the right answer is risk assessment, which is A. Now, a lot of you who have answered B, you all need to understand what did we learn? People, what did we learn? The internal audit engagements are based on what? It is based on people it is based on, can you, it is based on the risk assessment. Now within, when you're doing that risk, when you're doing that risk assessment, you can always consider that okay, these are regulatory requirements, these are inputs on the senior management and the board, but ultimately it should be based on what? It should be based on the risk assessment. Is that clear now? Is that clear, everyone? Yes or no? Yes.
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 Everyone. So please take a note. And this is where a lot of us make mistake here, because whenever we see senior management on the board, we think that okay, it is them. Whatever they will say, we'll do. Right? So no, people, their inputs are considered. But if you go back on our concept, it is based on influencer's judgment. It's based on risk assessment, is what we have learned, right? Of course, we will consider their inputs. I'm not saying we'll not consider their inputs, but it is based on the risk assessment. Right? I'll move on to the next question.
So is
Last,
it current risk assessment or last risk assessment?
it's basically last available risk assessment, basically the latest risk assessment that you've done. Right? Okay. Yeah. All right, let's move on to the next question, please. A simple question, people. Let's do this quickly. All right, people, let's do this in quickly 10 seconds more. All right, everyone, 5 more seconds. Let's do this quickly. Requesting everyone to participate. All right, everyone, time's up. Let's look at it. All right, so Sachin is saying it's A. Ramakrishna is saying it's D. Piyush is saying it's D. Nitin, Ranchana, Ashwin, Sanjeev, Nikita, Radhika, Barkha, Raghu, Deepak, Sanjay, sorry, Shankar, Shakti, Manish, all of you saying it's D. Shira, Jashash, Manali, Ankit, Bindya, Unmesh, everyone is saying D. Ranjana is saying inversely related, increase the SS level of control risk will lead to decrease in detection is very good. So that's correct, everyone. Here we are talking about if the risk level is increasing, like control risk SS level is increasing, what will impact on the overall audit risk level? It will decrease the detection risk because of the inverse relationship. Is that clear, Sachin, for you also? Yes or no, Sachin? Is that clear for you? Yes. So inherent risk and see control risk and detection risk is inversely related. It says increase the SS level of control risk. If you're increasing the control risk, detection risk will go will decrease, and vice versa. If it would have said decrease the SS level of control risk, then it would have been increasing the detection risk. Make sense? All right, lovely people. So with that, we have understood our Unit 3 content from the GLIM, from the slides. Now we have just 20 more MCQs that we'll practice, everyone. So I'll put that on the chat box. So we'll do this quickly, everyone. It's a small unit. I would like to close this today itself. So everyone, we have just 20 MCQs to practice on this unit. I'm putting that on the Zoom chat box. I would request everyone to please try and do this 20 MCQs in 20 minutes of time, so that we should then be able to discuss and close it. And the next session we do are straight away on the unit 5 then. All right, so I have already put it on the Zoom chat box. I hope you all have received it. Can you all please confirm? Yes. Have you, can anyone of you confirm? Have you received it on the chat box? Yes. All right, great.
Yes.
So lovely
Yes,
people.
yes.
So I would request you all to please start practicing. I'll also put it on the WhatsApp group just in a second. So let me just do that. Um, Meanwhile, every one of you, please start your practice. I'm just pausing the recording. Everyone, can I see yes on the chat box? Are you all with me? Can I see yes on the chat box, please? All right, great. Lovely, everyone. Lovely. So let's get the session begin, everyone. So I think all of you have submitted the response. Let's look at the average score. It is 15 on 20, which is roughly about 75%. The range is but between 5 to 20. So lowest score is 5 and the highest score is 20, which is also like okay, but the median is about 15. People, it's okay if you're not scoring well. It's completely fine. I mean, just learn from your errors. Just try to improve. It's completely fine, as I said. Um, let's quickly discuss this MCQs. But before that, anyone has anything to say on the MCQs when you were practicing before we start the discussion? Any one of you?
Arpit Raghu this side.
Please go ahead, Raghu.
I came across some MCQs which are repeated, but unfortunately, I've selected both the answers same and got it wrong also.
Okay. All right.
I think same here because I was also thinking that the questions probably it's a duplicate one, but I was wrong.
Yeah, same here.
So this was for which question you said?
That last question.
Control
I think the
risk.
last
And
question.
detection risk. All right. All right.
Yeah,
Yeah.
yeah.
Yeah. Right.
On the
And
detection risk
and
and the audit risk
And
part.
there are few
Because
very, very, very good questions also where there are chances of error, and I've seen a lot of you have made the error also, so I'll be talking about it. So completely okay. I mean, it's also going into detail and making these errors as much as possible in the class, because when you make error in the class, you will be little careful in the exam, right? So that's why I said even if you've scored less, it's completely
Agreed.
fine. So let's quickly start, and people again will follow a reverse order. We'll go with the questions below first, and then we'll go to the top because I again questions towards the down are more critical. Let's go with the question number 20 first. It says Gerald which CAE believes that the internal control over cash disbursement need major revisions. He discussed the matter with the senior management and was alarmed at their acceptance of their serious risk. So he discussed this matter with the senior management and was alarmed at their acceptance of the serious risk. What should the CAE should do next? Report the matter to the board immediately, or understand the management basis of accepting the risk, or determine whether management has the authority to accept the risk, or further attempt to resolve the disagreement. People, now this is completely different from what we discussed. So if you look at it, we discussed that discuss with the senior management and the board, and the next is report the matter to the board, right? But here it has added one more element. He discussed, now understand management basis of acceptance of the risk. So between the two leg, discuss, understand, and then report could be better. So if you see, that's why B becomes more appropriate. So earlier we have talked about it. Okay, go and discuss the matter with the senior management. Had this option not been there, let's say the CAE believes that the internal control over cash disbursement need major revision and management has accepted the risk, what should be the next step? Probably the first step would be discuss the matter with the senior management and the board. The next step here is discuss with the matter, when they have discussed, try to understand why the management has accepted the risk, and then it reports to the matter to the board would be the next step here. So people here, it is B which is more appropriate. Yeah, Raghu, please go ahead.
No, since he has discussed this matter with senior management, it doesn't mean that he has understood the accepting risk level. I mean, if that is the case, determine C would be a better answer in that case. So that's what I.
Okay, you have selected C. All right. See again, I completely get. I think your point of view is not incorrect, Raghu. It is just that I mean the question intent is more like what should be the most appropriate, right? So here we will practice more MCQs, and then maybe in the last unit, when you will see again communication as the last step. Again, there are 2 3 questions around this topic, and you will understand that again it all depends on the options available. So here in this case, specifically to this, if there is an option called understand the management basis for accepting the risk, it's more like discuss. Now let's try to absorb, understand, like that. Now you're very practical in saying that, okay, while I'm discussing, I'm understanding together. I don't have to go back and then understand, right? During discussion also, I can understand. So why do I need, I can just immediately go to with my next step, like go and report to the management, to the board also. So, but since here the options are given, so I think the intent is more around that, okay, we have discussed. Now let's try to understand management basis for accepting the risk. Like let's say maybe the management has given their views. Go back and see whether what they are saying is making sense. I think that could be the intent. But saying that again, it all depends on the option available. So I would request you all to please consider this as most appropriate. Okay. All right, I'll move on to question number 19. I think this was very easy. It talks about, or assuming that on the basis of audit evidence gathered and evaluated, auditor decided to decrease the level of detection risk. What is decrease the level of detection risk, people? What will happen to the audit risk level? It will lead to decrease in control risk, increase the material, decrease in it will increase in the control risk is right. I think most of you have answered this correct, except one. People, detection risk and control risk is inversely related, and there is no relevance of inherent risk here. I'll move on to question number 18. All of you have answered it here. It talks about auditor decide to increase the SS level of control risk. Increasing the SS level of control risk will lead to decreasing the detection risk. We have covered in the class. All of you have answered this correct. Is correct. People, now this is a very nice question. Question number 17. Can I request a volunteer who would like to come and read? Any one of you who would like to come and read? Any one of you? The risk that an audit procedures.
The risk that an auditor's procedures will lead to the conclusion that a material misstatement does not exist in an account balance when, in fact, such misstatement does exist is.
People, is it an audit risk? Is it an inherent risk? Is it a control risk and detection risk? People who have answered inherent risk. Is this correct? Inherent risk is risk without control. Simple. Control risk is that the control will not be working effectively, right? Between audit, so inherent risk and control is definitely not. So 3 of you have selected B and C, definitely not a right answer. Between A and D, people, now if you talk about it, it says the risk that an audit procedure will lead to the conclusion that a material misstatement does not exist. Audit procedure is what? It is the engagement procedure. It is more like a detection risk, right? That see, the risk that an auditor procedure will lead to the conclusion that a material misstatement does not exist in account balance, when in fact such misstatement does exist, is more like a detection risk, that we are not able to detect it. It's not, see, audit risk is that the auditor will lead to an inappropriate opinion. But here it is more talking about that the risk that an auditor's procedures will lead to the conclusion. So auditor procedures is more like is the detection procedures, right? Is the engagement procedures we need to detect. So that's why it is talking about detection risk and not an audit risk. Is that clear now? People, question number 6, are you all clear?
Yes.
Had this question will be the which of the following list talks about that the auditor will give an misappropriate statement that an account balance exists while in fact it doesn't, then it would have been audit risk. But here the question is more focusing on the audit procedures will lead. So audit procedure will lead is more like a detection risk. Is that clear? All right. I'll move
Yes.
on. I'll move on to question number 6. Now, if you read this out, it says in the audit risk model, the risk that an auditor will express an inappropriate opinion when the financial statements. Now, this is again same, right? So earlier, so this is where we spoke about auditor's procedure. That's why it moved to detection risk. But if you look at question number 16, it says in the audit risk model, the risk that the auditor will express an inappropriate opinion. It's not talking about procedure or something. So this is an audit risk. Now, some
Audit
of you are
risk.
saying it is detection risk. I hope you are clear between 16 and 17. Everyone, are you clear between question number 16 and 17? Yes or no? 16 is
Yes.
clear cut, inappropriate opinion, so it is audit risk. In question number 17, it says that the audit procedures were leading to incorrect conclusion. So that is what the detection risk is, right? That detection risk will not be able to detect it, right? So 17 is detection risk. I'll move on to question number 15 now. Again, similar line, people. It says that CA believes that the employer controls over. Okay, this is the same question, right, which we have covered downstairs, right? So I think we'll skip that. Understanding management basis or accepting of the risk is something we have covered. Moving on to question number 14, it says on the basis of audit evidence gathered and evaluated, an auditor decides to decrease the level of detection risk. Again, decreasing the level of detection risk is going to increase the SS control risk. This is also correct. I'll move on to question number 13. It says which of the following is not a requirement of risk-based audit planning? The CA consults with the external auditors. So do we need to consult with external auditor as part of risk-based audit planning? Yes or no, people? Have you read it anywhere?
Not super.
No.
No.
The risk-based
No.
plan consider the organization strategies and objectives. Yes, we should consider organization strategies. The risk-based plan is adjusted for changes in organization business. Yes or no? If there are changes happening in organization business, so risk-based audit plan should also be adjusted. Yes, we should do it. To determine the priorities of the employee activity, a risk-based plan must be established. That is also correct. So the A is appropriate. People, moving on to question number 12. Again, a lot of you have made mistake here. Let's talk about it. It says which of the following represents appropriate employment action in response to risk assessment process? The low risk areas may be delegated to external auditor, but the high risk areas should be performed by employed activity. Is this correct? What do you think? Is it correct? The low risk areas
No.
should be divided. No, this is not
No.
correct, right? The high risk areas should be integrated into an audit work schedule along with the high priority risk requests of senior management and the audit committee. Is it correct? People, high risk areas should be integrated
Yes.
into the work schedule. Yes. The
Yes.
risk analysis should be used to determine an annual work schedule. Thus, risk analysis should be performed only on annual basis. Now, this is a very nice option, people. The risk analysis should be performed only on annual basis. Is this correct statement or this is not a correct statement?
Wrong
Not a
statement.
correct statement.
No, no,
It
no.
says the risk analysis should be performed minimum on an annual basis, not on only on annual basis, right? So that's why C3 is not appropriate. Is that clear to everyone? Yes or no? Yes. So
Yes.
Yes.
everyone, that's why 2 is correct, which is why B is correct here. So people, again, these type of questions, you have to be reading it very carefully because if you see 9 of you have selected the risk analysis should be performed on annual basis is correct. We have learned that risk analysis should be performed minimum on an annual. But here it says the risk analysis should be performed only on annual basis, which only on the word itself is making the statement incorrect. Is that clear now? Everyone, yes or no? All right, great.
Yes.
I'll move on to question number 11 now. It's again only 4 of you have answered this correct. So people, let's try to understand. Which says which of the following factors is least likely to be considered in determining the audit work schedule? Engagement work program, effectiveness of risk management and control process, workload requirements, issues relating to organization governance. People, we have not understood work program yet, but let me try to explain with the help of example what is a work program so that you are able to understand this question. People, work program actually includes in a way what are the steps that we need to do in the course of audit and who will do and by when it will be doing it. So basically if you look at it in a way work program includes your work schedule also. Are you getting what I'm trying to say? So I'm trying to say that ideally your work program will have the work schedule also. Are you getting what I'm trying to say? Can you all say that with me? Generally your work program will have what? Can you all say that? Your work program will have what? Will have your work schedule. So when we
Work
will
schedule.
understand in the later part of the topics what is the engagement work program, then we will understand in generally in a work program you will see what is your engagement objective, what is your engagement scope, what are the engagement procedures that we need to apply, who will check this, why, how they will check it, by when this will be checked. Everything is documented in the work program. That is part of your engagement planning exercise. So which of the following factors is least likely to be considered in determining the audit work schedule? Your engagement work program is not considered in determining the audit work schedule, people. Actually, in your engagement work program, you will have the audit work schedule. Are you getting what I'm trying to say? In your engagement work program, you will have the schedule. Not you will not consider your work program for preparing your audit work schedule. Is that clear what I'm trying to say? So you will see how your yeah, please go ahead.
Sorry, what is the difference between work program and the workload requirements?
All right. So Yashish, I'll throw some light. See, work program is basically we are talking about that uh, in the later part of the chapter, especially in unit 5 itself. In the next unit, we'll understand that what is engagement planning, and within the planning, we'll talk about a work program like a topic. So when we will talk about work programs, see, work programs covers aspects like what is the engagement plan, and sorry, what is the engagement scope, what is the engagement objective. It talks about what are the checks, engagement checks, procedures that we are going to apply to check things in terms of whatever the engagement objective is, who will do it, by when they will do it, and later on it is further developed to refer the work papers also, that okay, this work program was carried in this way by this auditor, these are the reference work paper and these are the conclusions. So that's the level of work program, right? So work program starts with planning, it is updated during execution, and it is even concluded during the conclusion. So that's basically the work program. And now, what is workload requirements? Workload requirements is something to understand. Okay, this is the length of this is the population size, or these are the number of checks that we need to do, or whatever it is, right? So generally, a workload requirement you will consider in your work schedule. But all of this, the effectiveness of risk management and control process, workload requirements, issues related to organization governance, risk management control process. This is something that will impact your audit work schedule. Let's say if there are poor controls, you will put more emphasis. Let's say if there are too much of data, too much of complexity, of course your workload will increase, so that will impact your audit work schedule, right? How well the GRC process works, that will impact your work schedule. So workload requirement is in terms of the complexity of the process, in terms of the volume of the process, all of that. But work program is the document which auditor prepares along and which is reviewed by the supervisor, which covers what is the scope, what is the objective, what is the checks that they were going to do, who will do it, by when they will do it. That's part of the planning. Later on, the work paper references are put across that okay, this is being done, and supervision happens on the work program. And then accordingly, the final status is also concluded that what was the final conclusion of the audit. Everything is part of your work program. Make sense now? What I'm trying to talk about? Yes or no? Is that clear, Yashish?
Yeah.
Right. So, Shiva is saying audit work schedule and audit plan means the same or different term. So, Shiva is saying audit work schedule and audit plan, is it the same or a different term? So again, see, Shiva, audit plan is very again little subjective when it comes to CIE exam, because the word audit plan, if you see, audit plan is something that we've understood is like a risk-based audit plan, right? So risk-based audit plan is for the year. Now, you may say that, Arpit, here we are talking about an engagement level audit plan, right? So if we are talking about engagement level audit plan, so within the engagement planning only, we prepare a work program which covers everything. Are you getting it, Shiva? Yes or no? Yes. So you can say that if you're talking about this audit plan like a engagement level audit plan, then yes, this audit plan will also have the audit work schedule. Not just audit work schedule, it will cover more to it. It will talk about audit plan will have the scope, objective, people, what are the checks that are going to be done, and the schedule. Are you getting it, Shiva? Yes or no? Yes? All right, great. All right, I'll move on to the next question. I hope you're all clear on question number 11. Is that clear now? Yes or no? Yes? All right. I'll move on to question number 10, people. It says the CA is preparing the audit work schedule for the next budget year and has limited resources in deciding whether to schedule the purchasing or the people department or for an engagement. Which of the following is the least important factor? Major changes in operation have occurred in one of the department. People, what do you think? Is it least important? Is it important? If there are changes that are happened in operation, is it least important or is it important?
Important.
The Interloid staff has recently added an individual with expertise in one of the areas. So you have added one person in team, let's say, who has cybersecurity exposure. Do you think that is most important, or let's say changes happening in the department is more important?
Changes.
People, what do you think? More opportunities to achieve operating benefits are available in one of the departments. So let's say you have added a team member which have a skill set on cybersecurity. Will that be important, or let's say you have more opportunity to add value in terms of savings, in terms of bringing efficiency in the process, in the HR process? Which one will be more important?
Add value.
Add value, right? Updated assessed risk is significantly greater in one department than the other. Again, assessed risk is greater in one department than the other. Will that be important, or the recent expertise that has been added to the team, will that be important? Again, assessed risk will be important. So which of the following is the least important factor? The employed activity has recently added an individual with expertise in one of the areas may not be that important to prioritize any area. Is that clear, everyone? Yes or no? Yes.
Yes.
All right, I'll move on to question number 9. I think all of you have almost answered this correct. It says when which internal planning tool is general in nature and is used to ensure that adequate engagement coverage over time, over the period, people, over let's say 1 year, whether adequate engagement coverage would be there. Which document do we refer to over the year? It is audit plan. Engagement work program is specific to an engagement. All right. People who have not understood engagement work program, it is specific to an engagement. It is not for the overall audit plan. Is that clear? All right. I'll move on to question number 8. People, it says the innovators of Smoother Corp are considering lower risk audit as a part of the audit plan. They should include the lower risk audit, or they should only include the lower risk audit if senior management approves it. What do you think? What did we learn, people? What did we learn in the low risk areas? Should we include the low risk areas?
Yeah, they have to
Low risk
include
areas to include to give them
to
coverage and
ensure.
confirm their risk have not been changed, right? So that's what it
Okay.
says, to give them coverage and confirm that the risk have not been changed is correct. 3 of you have still selected D as an option. No, we can include low risk areas. People, question number 7, it says the CA perform a risk assessment before developing the annual audit plan. Which of the following is most likely to increase the assessment of identified risk? So again, people, the CAE perform a risk assessment before developing the plan. Which of the following will likely to increase the assessed risk? An immaterial anticipated drop in cash flow. People, immaterial anticipated drop in cash flow. Immaterial drop. Do you think it will increase the risk? Immaterial thing will increase the risk? Yes or no? The answer is no. One of you saying immaterial will increase the risk. That's not correct, everyone. Request from senior management to review the strategic plan. If the senior management has requested you to review the strategic plan, will that increase the risk? Or an unexpected significant increase in receivable not related to increase in sales? So there's an unexpected significant increase in receivable. Suddenly your AR has increased and the sales has not increased. In that case, do you think there is a assessed risk has increased? What do you think? People, option C. An sudden increase in your receivables, which means your collection is pending has suddenly increased, but your sales has not increased. Do you think there is some gap? Yes or no? Do you think that is unusual? Yes or
Yes.
no? Yes. Will you start focusing on this area? Right? Your sales is not increasing, but suddenly your debtors are increasing. You will start focusing here. A critical activity had not been subject to a compliance audit during the past years. Just because the audit was not done last year, does it mean that the assessed risk is high this year? Not necessary, people. C is more appropriate. There's an unexpected, unusual increase. And if you go back on the content that we've talked about it, and generally an unexpected, unusual increase will lead to what? Increase in assessed risk, right? So this is something that we spoke about it. Can you all see that? An unexpected, can you all say that? An unexpected significant change in an account
In an
that cannot
account that can be explained,
that cannot be
increases
explained
assess.
increases its assessed risk, right? So that's why C is the more appropriate. I'll move on to question number 6. People, it says the employment activity audit plan is based on all of the following except the audit universe. I mean, audit plan is not based on audit universe. Is that correct, or it is based on audit universe? What do you think?
Based
Of
on
course,
Based
audit
audit
on
universe
universe.
is the starting
Based on
point,
audit
right?
inverse.
Input from senior management, yes. Assess risk and exposure, yes. People, the cost of engagement is next step, right? So when we do planning, we look at audit universe, assess risk, input from senior management, the board. Cost of engagement is the next part. When we apply due professional care, when we do conduct engagement, at that point of time, we need to see cost of engagement. Moving on to question number 5, it says an organization has no formal risk management framework. In developing a risk-based plan and to determine the priorities of the internal activity, the CA should use the same risk-based plan developed for other clients or consult with senior management on the board and use the best judgment for risk. Limit the scope or not establish a risk-based plan. So consult with senior management is better. Use the same risk-based plan developed for other clients will not work, right? Because risk assessment has to happen specific to the organization. People, next question is also very interesting.
Repeat.
Sorry. Yeah, sorry.
I Manish had just a question. Let's say if the risk-based plan was developed for same client, but it was let's say 2 years back. So
Mhm.
in that case, can we accept point this as a? I mean, I've given the answer as a C only, but I just wanted to understand. So that let's say the risk plan was developed 2 years back, and now I want to develop a risk-based plan for current year. So in that case, should again we consult to the management, or we can take that as a basis to develop a plan?
So I think, see, it should be a mix. Then we should start with that as a base, but of course, input should be taken because a lot of organization changes may happen in the last 2 years, right? So again, considering that, we should again probably, if there is an option which says that okay, uh, uh, re-perform the risk assessment and consult something like that. be a better option here.
Okay.
It all depends on option available, right, Manish? So let's take an example. It says that don't prepare a risk-based plan. Just go with what you were prepared 2 years back. That is also not correct, right? All right, I'll move on to
Yeah.
question number 4, everyone. It says the employment activity of Reverse Financial Group is developing a plan for the current year. Which of the following should not be emphasized in the audit plan? People, again, in your audit plan, will you emphasize on all control system or areas where inherent risk is very high, control system on which organization is more reliant, unacceptable current risks that require management action? People, what do you employment plan focus on following? What can you all say that? Employment plan focus on what? Can you all say that? Unacceptable
Unacceptable current risk requiring management action,
control
control
systems on
system
which
on which organization is most reliant, areas where the difference between inherent risk and residual risk is great, areas where inherent risk is very
is
high.
very high, right? All right, so great. So people, here we are talking about which of the following should not be emphasized. So areas where inherent risk is very high, you will focus. Control system on which organization is most reliant, you will focus. Unacceptable current risks that require management action, you will focus. In the audit plan, you may not focus on all control system because it depends on the assessed risk, right? When you are preparing your audit plan, then you should look at your risk universe. That is fine. But in your audit plan, you will not be focusing on your all control systems. Is that clear now? Yes? People, these are very tricky questions, and only after practicing you will understand the other aspects to it. I'll move on to question number 3. It says risk assessment is a systemic process for assessing and integrating professional judgment about probable adverse condition or events. Which of the following statement reflects the appropriate action for the CA to take? The CA should generally assign engagement priorities to activities with higher risk. Is that true statement? Is it a false statement? The CA should generally assign engagement priorities to activities with higher risk. Is it a true statement? False statement? It is a true statement.
Statement.
The CA should restrict the number of sources of information used in the risk assessment process. People, should we restrict the number of sources of information, or we should consider the whole risk universe when we are doing risk assessment?
We should consider the whole audit universe.
Right, risk universe, right? So work schedule priority should be established to lead the CA in the risk assessment process. So people will work schedule priority should be established to lead the CAE in the risk assessment process, or CAE risk assessment process will help you to lead the work schedule priorities. What is it? Risk assessment process will tell you what are the work schedule priorities, or work schedule priorities will lead to risk assessment. What did we learn? Generally, our outcome of risk assessment would tell you, right, what you need to prioritize, right? Do you agree with me? Yes or no? Yes. So C is
Yes.
not
Yes.
statement, A is more appropriate
Yes.
here. I'll move on to question number 2, people. Again, it says the key input in evaluation of risk is what? Previous engagement results, management concerns, or judgment of employer. What did we learn? The key input in the
Judgment of
evaluation of
employee.
the risk is
Judgment.
employer judgment, right? So D is correct. And the first question, people, again, it says it says a CAE may use risk analysis in preparing work schedules. Which of the following is not considered in performing risk analysis? Issues relating to organization governance, skills available on the staff, results of prior engagements, major operating changes. People, again, when you perform your risk analysis, what you will not consider? Will you not consider issues related to organization governance? You will consider. You will consider results of prior engagement. You will consider major operation changes. But when you're performing risk analysis, will you consider what is the skill set available in your team? When you're performing risk analysis, will you consider what are the skill set available in your team? The exact
No.
question, the
No.
first thing that we've learned, right? So the knowledge, skill, and other competencies do not affect the risk assessment, right? So we'll not consider the risk skill available in the team. Is that clear, people? Are you all now familiar, and are you able to understand how do we answer these questions? Yes or no? Yes.
Yes.
So lovely, everyone. So with that, we have understood, of course, on the risk-based audit plan, people, as we move forward in the next unit, we'll again cover few questions around this topic on the previous topics like we do always. So like, for example, here in the first question itself, we have talked about assurance and consulting, which comes from the unit 1, right? So we'll keep doing more and more practice. My suggestion to all of you is, as we move forward, people who have not appeared for the part 1 yet and who are planning, and I'm sure a lot of you are probably appearing in the coming week. So please focus on your part 1 and clear it. People who have already cleared it, start revising your part 2, because we are already on the unit. We have completed unit 4 now. So in a way, we have completed our first section. So in a way, we have done 20% of the syllabus, managing the employment activity. The next units that get started from section 2 onwards, planning the engagement and performing. Now, these are smaller units. If you see, the content between 1, 2, 3 was huge. Unit 4 was such small and important. Unit 5, Unit 6, Unit 7, these are smaller units, but these are very, very important units. And if you see the weightage from Unit 5 to Unit 9 is about 60%, like 4 to 5, 5 units will cover another 60% of the weightage we are talking about, right? And the last unit itself is 20% weightage. So we are talking about between unit 5 to unit 10, we are talking about 6 units covering 80% of the syllabus. So content is less, but the weightage is very, very high for the exam. So the next few units are going to be faster. Like risk-based audit plan was a 1 day unit. Similarly, engagement planning, risk assessment objectives could be a 1 day unit. Engagement procedures could be another day unit. So I am foreseeing that we will be able to complete these session series latest by end of Feb or the first week of March. First week of March most likely would be done with the session series, and the expectation would be if you can appear by mid of March. So accordingly, please start your revision so that we are not delayed later part of it. The objective is to clear all the parts as soon as possible. So please start your revisions accordingly. All right. Thank you all for your time on the weekend, and see you all in the next week. Till then, start your revisions. Take care. Do well in whatever you are doing. All the best, everyone. Thank you.
Thank you. Thank you, everyone.
Thank you.
Thank you.